My spin is playing in between gigs. Rock on!
My spin is playing while my perm sets in.
My spin's a cheeky game after 5-a-side. Oi, heads up! Gala Spins is the riveting online world of challenges and unmissable rewards, where you can play great games like Slingo Rainbow Riches. However it suits you. Put your spin on it at galaspins.com. What's your spin? BeGambleAware.org.
Redefining financial printing.
Yo, look at this, look at this. What do you reckon? Should I swipe right? Yo, check this out, check this out, check this out. Yo, bro. Hey, look at this. Yo, look at this, look at this. Should I swipe right? Hey, look at this. Yo, bro, check this out, check this out. Should I swipe right? Check this out. Look, I'm vomiting rainbows.
Oi, get your phone out my face. I'm trying to drive.
Sorry, mate. Your mate's more likely to crash with passengers in the car. So don't drive him to distraction. Let a mate concentrate.
At Dell, when we created the new XPS 13 laptop, we treated every little piece like it was everything. We crafted every part as if it were the most important thing we'd ever made. The result? Something you'll have to see to believe. Pity this is radio. See the new award-winning Dell XPS 13 at dell.co.uk. Every little thing is everything.
On this week's On the Media, we are awash in messages, but some messengers are more effective than others.
Ventilators, ventilators, ventilators. We need 30,000.
Meanwhile, some media outlets choose not to air the president's press briefings live, and media critics ponder what's the right balance between good information and all information. All that and more on this week's On the Media from WNYC. Listen to the On the Media podcast on TuneIn today.
TuneIn makes it easy to be a part of the conversation. Just make sure push notifications are enabled to hear about breaking news and trending topics from around the sports world. You'll also get custom recommendations of podcasts and radio stations covering the sports and teams you care about.
Broadcasting live from the Bloomberg Interactive Brokers Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119 and around the globe. The Bloomberg Business app and BloombergRadio.com. This is Bloomberg Surveillance.
From New York City, this is Bloomberg Surveillance for our audience worldwide. We're live on Bloomberg Radio. Equity futures up a third of 1% on the S&P 500, positive a little more than 8 points, call it 9 points higher this morning on the session. A little bit of breaking news coming out of J&J. Johnson & Johnson announcing a lead vaccine candidate for COVID-19, announcing a partnership with the U.S. Health and Human Services. I should emphasize it is still early days. They see initiating human studies of the vaccine candidate by September. There is a commitment to supply 1 billion vaccines worldwide for the pandemic. The first batches of the vaccine, Tom, would be available in early 2021. I should stress, just to repeat, they see themselves initiating human studies of the vaccine candidate by September. It is still early days.
John, I am so glad you brought up this news item. I went back and forth 3 or 4 times this weekend with Peter Hotez of Baylor University, and the frustration of the medical professionals dealing with it, what they know is the normal long timeline, and trying to explain that to mere mortals like us, scared stiff out of our minds. It's really frustrating for them.
There's a lot to work through. It takes a long time. It's encouraging news nevertheless, but it is early days. Their stock is up by a little more than 5%. So that's a single name for you. And foreign exchange, Tom, the story really has just been a weaker dollar through last week, but a stronger dollar over the last couple of weeks and this morning as well. This morning on my screen, Tom, for anyone that's lost out there, G10 is weaker against a stronger dollar.
Yeah, and EM is a little challenging to say the least. I mean, ran out to record low and peso not having a good day. But I think it's time, John, we get a briefing.
Let's do that and bring in Jane Foley, shall we? Rabobank Head of FX Strategy. She calls in from London. Jane, always great to get your thoughts on the program. The dollar story has almost been seen as a symptom of a crisis elsewhere. The dash for cash. And this is what Standard Chartered had to say over the weekend, that the dollar may now become a barometer of the efficacy of the policy response to all of these difficulties, but they are also important because dollar strength is no longer just a symptom of a market crisis, it risks becoming a crisis in and of itself. Jane, what is your view on that?
Well, I think that's probably true. I think really the reason that we've had dollar strength, well, obviously not last week, but before that, into this crisis is the build-up has been going on for years. I would say 10 years or maybe 20 years. And I think, excuse me, this is about the development of emerging markets. As emerging markets have grown, dollars for transactional purpose have grown, emerging market dollar-denominated debt have grown, etc., etc. So the dollar has become far more important for an awful lot of people over the past decade or so. So we have that. So that's why there was this massive rush for dollars. And in fact, this isn't particularly new. In fact, if we go back the last few years when we've seen dollar strength from early 2018, we can sort of track dollar strength against, say, the MSCI Emerging Market Equity Index. As flows were coming out of emerging markets, they tended to go into dollar and vice versa. So that was the trend, and obviously that was just blown out of all proportions as funds capitulated out of high risky assets, etc., over the last few weeks. But I think in terms of the dollar, I think we really do have potentially more to go. I think if you believe that this crisis is now finding a bottom in terms of the economic consequences, then perhaps you expect that the dollar is going to suffer from here on in. But actually, I think the reality is that this isn't it. We perhaps still have further selling to see in stock markets, and therefore we've probably got further bouts of dollar strength until we finally found a bottom.
And Jane, well said. And to me, in the literature, the distinction here is not the toggle switch of dollar strength or dollar weakness, but the likelihood, as you've been so eloquent on, I think of David Bloom at HSBC as well, of dollar stability being essentially a dollar strength equivalent. Is that still true?
I think that is true too. And you raise an important point, really. I mean, dollar stability. Do we or can we expect to see intervention, for instance, coming back onto the cards in the next few months? Trump certainly doesn't want to see the dollar this strong. And of course, the strength of the dollar is very damaging for many other countries too, emerging market countries too. They will not necessarily want to see the dollar this strong. It could be quite damaging for them if they, for instance, import various commodities, various goods. So it brings in this issue about stability. We've been spoiled, I suppose, particularly last year and recent years, of relative lack of volatility in foreign exchange. And of course, we've seen huge amounts recently. How valuable is that to companies? How valuable is it to central banks and governments? Well, it is quite valuable. And so do we see intervention coming back as a more habitual circumstance in the next few months?
I mean, Lisa, I'm ready for another Plaza Court. I'm looking down Central Park here, and I can see the Oak Bar where John used to hold court years ago at the Plaza Hotel.
And hopefully it'll be reopened sometime in the near future. We're all looking forward to that day, Jane. There is a question of what's behind the dollar strength that we have seen that has been destabilizing in itself. A lot of people speculating it was levered currency trades being unwound, as well as just margin calls and just this need for cash. How far along in some of those leveraged trades are we in terms of unwinding them? How much technical pressure have we already worked through that's led to the dollar strength?
I would like to think that we've worked through a fair amount. We are quite a way into knowledge about this crisis. We know now, for instance, even today, we've seen a lot of news that the shutdowns, the lockdowns in the economies are going to be extended. So I would say that whilst the market was very slow immediately, particularly in Europe and the US, to react to what was going on in China, we've been hearing about the coronavirus news in China really since December and through January, in the stock markets, the markets in the West were not reacting to this. Once they were very slow, obviously once they did start to react, it became very, very rapid. And I would like to think that a lot of those unwounds are now largely through the system.
Jane, this is a really tough environment still for emerging markets, and I've always said that the biggest difference for me for EM and DM is when things hit the fan in developed markets, sovereign rates rally, and when things hit the fan in EM, sovereign rates sell off, and that opens the door to a much bigger fiscal response, fiscal effort in developed markets versus emerging markets. And any weakness in EM just kind of feeds on itself. Are you worried about the trajectory emerging markets are on right now, Jane?
Yeah, completely. I mean, it is interesting. Of course, South Africa this morning, we did see the credit rating downgrade Friday night, I think it was. The market didn't react too much, but of course that's because that news wasn't totally unexpected. I mean, many people had already priced that in. But we can expect it to see more bad news, particularly with particularly vulnerable economies. And often is the case in EM, is that immediately when there is bad news, when there is a crisis, everything gets sold off. But what begins to happen as the dust settles, investors begin to differentiate between EM with good fundamentals and those with much poorer fundamentals. So in the next couple of months, we will see differentiation coming through, but certainly those vulnerable countries are looking even more vulnerable right now.
Jane, great to get your thoughts this morning. My best to you and the team over at Rabobank. Jane Foley there of Rabobank, the head of FX strategy. Tom, pretty much every single BIS quarterly report by Claudio Borio, I think, has contained something about dollar liabilities and emerging markets.
Absolutely.
Over the last 10 years.
Not that, it's never history repeating itself, but it's got such a tinge of the 90s where we're waiting for some exogenous shock to slam EM. The fragility that you see on the Bloomberg folks and EM, John, it's tangible.
Yeah, record weakness in the Mexican peso over the last couple of weeks. Overnight at the start of trading for this week, FX and the South African rand, not looking pretty at all.
The South African currency hurting there. And part of that's the commodity sell-off. Commodities not out to new lows. But, John, I don't know where oil is right now, but the answer is Brent is grim. There's no other way to put it.
WTI too. We had a 19 handle on WTI, Tom, and I know there's some talk of some corners of the commodity market in the United States actually trading with negative prices because we've now got to this story where we're breaching storage capacity, and when you breach storage capacity, there's only one way for price to go if you keep on pumping.
Yeah, read Javier Blas, folks, at Bloomberg, just outstanding on some of those dynamics. The Bloomberg NJ IT STEM report, brought to you by New Jersey Institute of Technology, designated an Innovation and Economic Prosperity University for its support of business and community development. More at njit.edu. Here's Bob Moon.
Tom, Lisa, Jonathan, good morning. Here's what's making news in science, technology, engineering, and math. Just a few days ago, one of the world's leading virologists was offering his insights on news programs around the world, talking about extreme measures he was taking to avoid the coronavirus. Now, Dr. Ian Lipkin, who heads Columbia University's Center for Infection and Immunity, says he's tested positive for COVID-19. The 67-year-old epidemiologist had traveled to China several weeks ago, but had self-quarantined for 2 weeks after returning, and says it's unclear where he contracted the virus. He was chief scientific consultant on the 2011 pandemic movie Contagion. Researchers at Northwestern University are making parts for critically needed medical face shields with a high-speed 3D printer able to make about 1,000 headbands per day for the shields. Using a technology called HARP for high-area rapid printing, the 13-foot-tall machine is running 24 hours a day and putting what the researchers call a meaningful dent in the high demand for face shields. And anybody can join in the battle against COVID-19 by putting their own computer to work, running calculations known as protein folding to help scientists better understand the coronavirus. The idea of distributed computing has been around for decades. An application that runs in the background combines the processing power of hundreds of thousands of PCs. Experts say it could help in development of life-saving drugs to treat the virus. You can learn more on the website foldingathome.org. That's the Bloomberg NJIT STEM report. Tom, Lisa, John.
Bob Moon, thank you. Thank you very much, as always. We get you some news, some headlines worldwide. We can do that from New York with Michael Barr. Good morning, Michael.
Good morning, John. Lisa, Tom. President Trump extended lockdown measures across the country to prevent the spread of COVID-19. President Trump warned 100,000 or more Americans may die from the pandemic. The president also did a U-turn on his ambition to restore normality by Easter. He said he hoped the country would reach the bottom of the hill by June 1st. Treasury Secretary Steve Mnuchin said that Americans could expect checks from the historic $2 trillion stimulus bill to be direct deposited in their accounts within 3 weeks. Louisiana Republican Senator John Kennedy told Fox the stimulus package had unneeded expenses included.
It was started by Speaker Pelosi with her left of linen bridge to nowhere projects, but I think once we drill down, we're going to find out that she's not the only one.
Included are direct payments to many Americans, an unprecedented expansion in unemployment benefits, and $350 billion in small business loans. Americans are paying the lowest gas prices in years because of the economic shutdown in many parts of the country. Bloomberg's Martin DeCarroll reports.
The national average price for a gallon of regular unleaded dipped beneath $2 for the first time since March 2016, according to price tracker GasBuddy.com. Demand has fallen off a cliff, with more than a third of Americans living under stay-at-home orders. Industry analyst Trilby Lundberg sees prices plummeting even more.
Maybe 50 cents by mid-April.
The last time gas was cheaper than $1 a gallon, nearly 20 years ago. In Washington, Martin DeCaro, Bloomberg Radio.
Global news 24 hours a day, on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Michael Barr. This is Bloomberg, John.
Michael Barr, thank you, sir. Always appreciate your time. Thank you very much. That is the news, the headlines worldwide, particularly here in the United States. Let's get you some price action this Monday morning. For equity futures, they are totally unchanged on the S&P 500. Once again, a sizable range. That's something you've got used to. Equity futures up as much as 1.72%, down as much as 3% overnight. In foreign exchange, here's the story for you. Against G10, the dollar stronger against everything. And in the bond market, Treasuries set up as follows. Yields coming down 3 basis points on 10s to 0.646%. Alongside Tom Keane, I'm Jonathan Ferro, together with Lisa Abramowitz and Tom's dog Vet Bill. This is Bloomberg Radio.
With the Bloomberg Business of Sports Report, I'm Michael Barr. Major League Baseball and its jersey manufacturer are teaming up to help protect Americans against the spread of the coronavirus. MLB and Fanatics are partnering to manufacture hospital gowns and protective masks with the same fabric used to produce jerseys to bolster the supply needed to fight COVID-19. Fanatics, based out of Easton, Pennsylvania, is converting its manufacturing center to a production center for the personal protective gear hospital workers desperately need as the virus spreads. The league and Fanatics will cover all costs associated with the endeavor. Vinny Viola, the owner of the National Hockey League's Florida Panthers, has committed to paying the team's entire staff in full throughout the coronavirus crisis. The NHL suspended its season March 12th. And that is a Bloomberg Business of Sports Report. I'm Michael Barr, brought to you by Marcus by Goldman Sachs. With a high-yield online savings account, you can money.
Why is delivering the best client experience a top priority at BNY Mellon's Pershing? Michelle Feinstein, Director of Client Engagement, explains.
Today's investors want a financial relationship that's on demand, customized, and leverages the latest digital technology. At BNY Mellon's Pershing, helping advisory firms and broker-dealers create great experiences for their clients is our priority. Through our integrated wealth experience, we give you a high-touch service, flexible technology choices, and expert insights, so you can deliver a highly personalized experience to your clients at every step, from onboarding to wealth planning, to performance analysis and more. And because we're part of BNY Mellon, you'll benefit from more than 230 years of strength and stability. At Pershing, we're personally invested in your success.
Visit Pershing.com to learn more about Pershing's integrated wealth experience. Pershing LLC and Pershing Advisor Solutions LLC are both members of FINRA and SIPC.
Like what you're listening to? Want to make getting back to it easier? Use the favorite button to keep track of the stations and podcasts you love on TuneIn. Just tap or click the heart icon to add it to your favorites. Then find all your go-to audio under the Favorites tab. Pretty easy, right?
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
Next time on the New Yorker Radio Hour, I'll talk with our Washington correspondent.
about the many political battles being waged in the Capitol over how to deal with the new coronavirus.
You couldn't imagine a president personalizing a crisis with a virus, but somehow that's where we are.
Susan Glasser. Listen to this episode of the New Yorker Radio Hour on TuneIn today.
TuneIn makes it easy to be a part of the conversation. Just make sure push notifications are enabled to hear about breaking news and trending topics from around the sports world. You'll also get custom recommendations of podcasts and radio stations covering the sports and teams you care about.
Headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and on Quick Take by Bloomberg. This is a Bloomberg Business Flash.
And I'm Karen Moscow, and U.S. stock index futures have been fluctuating while European stocks slip as investors weigh a weekend full of negative coronavirus news against the stimulus measures that triggered a bounce in risk assets last week. We check the markets every 15 minutes throughout the trading day on Bloomberg. S&P futures up 6.5 points, Dow futures down 8, NASDAQ futures up 27. The DAX in Germany is down 0.6%. 10-year Treasury up 8/30 seconds, yield 0.64%. The yield on the 2-year 0.25%. NYMEX crude oil down 5.4% on $1.17 at $20.34 a barrel. COMEX gold down 0.6% or $10.20 at $16.43.90 an ounce. The euro 1.1057 against the dollar. British pound 1.2440 and the yen at 108.03. The VIX at 64.36. Johnson & Johnson saying its first batch of a COVID-19 vaccine could be available for emergency use authorization in early 2021. It announced a commitment to supply 1 billion vaccines worldwide for emergency pandemic use, and its shares are up more than 4% this morning. Also watching Abbott Labs up more than 9% after unveiling a 5-minute coronavirus test. That's a Bloomberg Business Flash. Tom, John, and Lisa.
Karen, thank you very much. Karen, on top of the markets there, let's pick out a single sector, the financials. At the start of this year, a 10-year yield in America was in and around 190. It is now 65 basis points.
Yeah.
And as Treasury yields have collapsed, as our visibility for the global economy has collapsed, and the earnings profile for many companies has plunged, the banks have been absolutely hammered. Through Q1, Tom, they're down around about 39%. These aren't just the small banks. We're talking the likes of JP Morgan down 35% in a single quarter that still isn't over.
This is someone, John, we've tried to get on for days. He's been very busy. Gerard Cassidy, of course, legendary at RBC Capital Markets. And Gerard, as John mentions the gloom, this is really about the arch call. Some people say walk away from the financials, and others say aggressively buy the banks. Which is it?
Tom, I think what we're going to find a year from now, we're going to look back and realize that between the end of March and early May, that was the bottoming in the bank stocks, and we should be buying them. The question for investors today is, do we literally buy them this week, or do we wait for some better bottoming signs and purchase them the following week? But it is right about now. This is the time I think people will realize that when we look back, when you could buy banks like Bank America at a discount to book value, currently trading at 79% of book, to John's point about how stocks have fallen, this is the time to own these banks or commit new money to the banks either in the next 3 or 4 trading days or sometime in the next week or two.
Jared, funny enough, on a morning like this morning, I'm less interested in the call and more interested in the work behind the call, the process you go through to come up with the idea that this is perhaps the bottom and the time to buy. What are the things that you're looking at the moment? What are they?
I think the first thing you look at, John, is look at the strength of the balance sheets of these American banks and the liquidity. Not only that, we must remind ourselves that these banks go through a stress test every year. Now, granted, nothing has predicted or prepared us for this type of stress. However, I would point out, in the stress test, some of the stresses include the market dropping 50%, housing prices falling 25%, commercial real estate prices falling 35%, and the banks come through these tests with flying colors. So I think what people will find out, this is not 08, 09. There should not be any dividend cuts. So that's some of the work we've done. Also, when you take a look at the amount of losses these banks can take to get through this crisis and still have enough capital to pay dividend, it's pretty impressive, the amount of capital that they have on the books to survive big credit losses.
Gerard, big credit losses is what a lot of people are looking for when it comes to consumer debt, credit cards on these bank balance sheets, but also when it comes to the $200 billion plus of commercial bank loans that have been withdrawn as companies try to shore up their liquidity. How concerned should investors be about that dash for cash, credit losses, as well as just the amount of capital these banks have left?
It's a really good question, and I would point to what an investor's outlook is for the second half of the year for the U.S. economy. It's our expectations there will be a recovery based upon a $2 trillion stimulus plan that the U.S. government has done, but more importantly, and we are seeing it in the credit default market already, which is the Federal Reserve's programs that they've put in for liquidity should really help on this front. So to your point on drawing down the lines of credit, many high-quality companies have done it as well as some that are in stress.
George Cassidy, you and I have a multi-decade joy where I always go at one point, okay, give me the four-letter stock, the small bank. It's an uncommon value. Can you do that now? Or is it so beleaguered that you just can't look at the small banks?
Tom, I think you put your thumb on it. The one area of our concern is the small business lending market. And these small community banks, that's their bread and butter to the local commercial real estate market and to the small businesses. And yes, there is a relief coming from the federal government in the forms of loans to these businesses, but it's going to take a couple of weeks at least to get to these companies. So that is an area that is unduly under stress right now. And it is very tough, I think, to step in with both feet on some of the smaller names at this time.
Gerard, headline crossing a Bloomberg in just the last 60 seconds that Germany is asking companies to suspend dividends for coronavirus aid. Looking at the financials specifically, it's been a huge pillar of support for the big names on Wall Street, the capital return programs. How difficult is it to forecast the return of those capital return programs anytime soon?
It's interesting, John, because the ECB, I think, asked for some of the other European banks already to suspend the dividends as well. And I think the American banks are in a much better place because of the capital levels, because the measures they took following the financial crisis, and there's no need to require them to cut their dividends. Now, that being said, you never say never. But the Federal Reserve knows, though, that if you require the American banks to suspend dividends, you're going to have a crisis in confidence, because that's what happened in 08-09. When the dividends were cut, people realized that the banks were in serious trouble. So I would be surprised if the Fed came out, because that's who would direct it, to force these banks to cut their dividends or to suspend them for the time being.
Gerard Cassidy, always great to get your thoughts on this program from RBC. The thoughts of surveillance with you all over at RBC. Gerard, I appreciate your time this morning. That news coming out of Germany. The German-listed companies will have to suspend dividend payments to qualify for government assistance. If you want the assistance, you've got to get rid of the dividend payments. That's according to two people familiar with the policy.
We're seeing some similar kinds of guidance coming out of the U.S., although it's unclear about that nearly $500 billion lending program from the government. There will be restrictions on share buybacks and executive compensation. It seems like perhaps these are similar types of restrictions in Germany. Interesting to see, though, globally, what this might do to equity valuations.
As well, there should be too. If you want assistance, there will be restrictions that come along with it. Equity futures this morning. Good morning to you all. They advance on the S&P 500 by around about 14 points, up by 0.6% on the S&P 500. In your bond market, a bid through most of the session so far. Yields come down 3 basis points to 0.64%. From New York City, for our audience worldwide, this is Bloomberg.
Like what you're listening to? Want to make getting back to it easier? Use the favorite button to keep track of the stations and podcasts you love on TuneIn. Just tap or click the heart icon to add it to your favorites. Then find all your go-to audio under the Favorites tab. Pretty easy, right?
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
On this week's On the Media, we are awash in messages, but some messengers are more effective than others.
Ventilators. We need 30,000.
Meanwhile, some media outlets choose not to air the president's press briefings live, and media critics ponder what's the right balance between good information and all information. All that and more on this week's On the Media from WNYC. Listen to the On the Media podcast on TuneIn today.
Want to know a great way to discover the latest and greatest sports audio on TuneIn? It's easy. Just make sure push notifications are enabled on your phone to receive recommendations of sports talk radio and podcasts, along with important breaking news updates.
Then try Babbel for free by texting EXPLORE to 64,000. In just 15 minutes a day, you'll be on your way to speaking a new language in just a few weeks. And right now, you can try Babbel for free. Babbel starts out teaching you words and phrases by matching them with pictures. You won't believe how easy the interactive program is. Soon the sentences get a little bigger, and before you know it, you're having simulated conversations voiced by native speakers. And because Babbel is crafted by language experts and uses the spaced repetition method, in just 10 to 15 minutes a day, you'll be speaking the language of your choice with real confidence. With Babbel, you can speak a language. Just text EXPLORE to 64,000 and start your first lesson in the language of your choice for free. Download the Babbel app or text EXPLORE to 64,000 and try it for free. Text EXPLORE to 64,000.
Hey y'all, Jeff Foxworthy here. Now, if you've ever found yourself repeating the same thing over and over for 75 years, you might be Smokey Bear.
Only you can prevent wildfires.
That's why I'm filling in for Smokey to switch things up, because there's a lot more to say. And I should know because my grandfather was a firefighter. And one of the things he taught me is that the people that love the outdoors the most are often the ones accidentally starting wildfires, which means always BYOB. No, bring your own bucket to the campfire. And be extra careful with things like burning yard trimming. Don't just walk away, or chances are you might be starting a wildfire. So for the love of the outdoors, go to SmokeyBear.com to learn more about wildfire prevention. Brought to you by the U.S. Forest Service, your state forester, the Ad Council.
This is a Bloomberg Money Minute. Abbott Labs is unveiling a coronavirus test that can tell if someone is infected in as little as 5 minutes and is so small and portable that it can be used in almost any healthcare setting. The company plans to supply 50,000 tests per day starting April 1st. Strategists at J.P. Morgan Chase say they believe that the riskiest investment assets, which would include stocks, have seen their low points, but investors remain cautious this morning. Traders are weighing the worsening coronavirus pandemic against stepped-up economic rescue packages around the world, including the U.S. And the top infectious disease expert in the U.S. said U.S. deaths could reach 200,000. Meanwhile, President Trump abruptly abandoned his ambition to return American life to normal by Easter. And in a stark shift from his earlier remarks, he said that 100,000 Americans or more could die. The president said guidelines for social distancing would remain in place until at least April 30th. Gina Cervetti, Bloomberg Radio.
Two people who are as fascinated by the markets as you are.
What's your sense of the competitive landscape in the cloud business?
Lisa Abramowitz.
People were talking about potential regulatory pressure.
And Paul Sweeney.
Are you seeing flows into ESG ETFs?
Bloomberg Markets.
What's your main conversation today with some of these corporate executives?
Weekday mornings at 10 Eastern.
They're spending a lot of money there.
On Bloomberg Radio, the Bloomberg Business app, and BloombergRadio.com. Bloomberg, the world is listening. We have to get it right the first time.
We always talk about the losers in a trade war.
You benefit if you're just further away from China.
So that you can too.
What are the ramifications if she crumbles or doesn't crumble?
Bloomberg Radio, the Bloomberg Business, Radio.com, and iHeartRadio apps, and BloombergRadio.com. Bloomberg, the world is listening. From the financial capital of the world, 24 hours a day at Bloomberg.com, on the Bloomberg Business app, and on Quick Take by Bloomberg. This is Bloomberg Radio. This is Bloomberg Surveillance Economics.
We are being taken out of our comfort zone by the coronavirus.
Dollar weakness is pretty much a good thing for a lot of the rest of the world.
Finance.
We are going to see a global demand contraction this year, most likely, for oil. The financial health of the business sector has deteriorated somewhat.
Investment.
Obviously, the value in high-vol stocks are going to continue to suffer.
It looks as though the bond market is talking itself into a recession here.
Bloomberg Surveillance with Tom Keene, Jonathan Farrell, and Lisa Abramowitz on Bloomberg Bloomberg Radio.
Good morning, everyone. John Farrow, Tom Keene, and Lisa Bramas. Thank you so much for being with us today. We welcome all of you in Boston, New York, Washington, across this nation on Sirius XM, Channel 119. Of course, early good morning in San Francisco as well. John, what we see is oil south, commodities hammered, but also what we are living is a forever changed New York. As we speak, John, I'm looking down on 11 white Samaritan tents outside Mount Sinai in the 90s. It's an extraordinary scene, John, to see a tent hospital city lodged on the lawn where the children play in Central Park.
Tom, moving images for us all, including the President of the United States. The Washington Post reporting and actually publishing this morning, reflecting on the President's own experience with the images of New York's Elmhurst Hospital in Queens, near where the President grew up, and the very, very sad, tragic images of bodies leaving that particular hospital, Tom, in trucks. And it is that tragic at the moment for New York City and for many major cities worldwide.
And we must say to all of Jeffries worldwide, the death of their chief financial officer, just extraordinary to hear that tragic news over the weekend, and many other stories as well. And dovetailed on this, Lisa, is the market reactions as well. And as John mentioned on equity futures, it's a jumble this morning.
Yeah, well, it's a jumble emotionally, too, and I think that can't be overstated. When you talk about the situation in New York, the number of 911 calls has exceeded what we saw in September 11th. The emergency responders are overwhelmed. People's lives are disrupted, and these are in the financial centers, and you do have to wonder how much that's coloring some of the really dire economic outlooks that we were reading throughout the weekend, as well as just sort of the uncertainty, Tom.
Before we get to Dr. Anglin or John, I just want to say that one of the things happening on this Monday across this nation is we all dive into distance learning. People with children have their kids glued to computers in this huge national experiment of can kids really learn from home, and we'll have to see how that goes.
Well, they're about to get a foreign exchange clinic on Bloomberg Radio, so stay tuned, kids.
They're
with Standard Chartered.
They're eagerly listening.
Let's talk about a dollar, shall we? And the dollar strength, this according to Standard Chartered, no longer just a symptom of a market crisis, it risks becoming a crisis in and of itself. Steve Englander joins us on the phone right now, the global head of G10FX Research. Steve, always great to get your thoughts. Walk us through that a couple of steps further. The risk that this dollar strength story of the last month risks becoming a crisis in and of itself.
Well, there are two avenues by which it can indicate that there's a crisis. One is what we've discussed often, the insatiable appetite for dollar liquidity, which shows up both in money markets and in the strength of the dollar. The other part, which I think has to be considered, is what happens in emerging markets. They have a lot of dollar debt that has to be serviced. Many of them export commodities. Their growth picture is looking increasingly soft. If you overlay the added debt burdens on top of the economic woes that they're facing, we really could run into deep issues here.
What does the IMF need to do? We know the institutional solution, Dr. Angleter, in America, in London, in Germany, etc. What's the institutional solution for the International Monetary Fund to assist EM economies?
Well, they have to find some way of making sure that they have the liquidity that they need, and that given that they may not be producing and exporting very much, that the usual sort of balance of payments considerations that go into giving them loans should be set aside for a while. I think, we published a piece called Speed Rather Than Efficiency, talking about U.S. policy, but that applies to global policy as well, that it's much better to have a good but slightly imperfect policy than to have a delay and have a policy that comes too late.
Steve, I was reading research over the weekend about Latin America in particular and how it could be poised for a crisis that's worse than what we saw in the 1980s. Do you agree?
The 1980s was pretty terrible. So even if you said as bad as the 1980s, you'd be talking about something that's far worse than anyone has anticipated in anything that we've experienced in recent years. Look, there is a risk. Hopefully if things will bounce back. And I say that the good news for Latin America, and it's not at the moment, it's down the road,
is that when things do come back, there will be a lot of pent-up demand for manufactured goods. And those will be, the factory system, the industrial system will be able to produce them and deliver them. So the products that they produce may be, surge into demand down the road. But right now it's not helping them, right? Right now they're facing low commodity prices. We saw oil take a tumble overnight, and it's a very dire situation.
Just on the positive side, are there any developing markets that are more immune from both the dollar strength as well as the tumble in oil prices?
Well, look, we've seen China hold in very well. After that, it's a mix. I think that it's very hard to, pick out one and sort of say this one is really going to do very well. Hong Kong dollar is held in very well. Taiwanese dollar is held in very well. Shekel depreciated less than most. I think it's, but these are low beta currency all the time. So to call it outperformance is a bit too flattering. It's basically saying, look, these guys don't move very much anytime, and they're not moving now, but they won't enjoy the upside if the global economy recovers.
One of the problems, Steve, just to jump in if I can, is that DM can respond by having a massive fiscal stimulus plan, a fiscal plan that means they can put a bridge under any of those obligations that can't be met, help SMEs with debt, help other big companies with debt. In EM, you don't have that luxury. You don't have the luxury of coming out with a massive fiscal plan that helps to put a floor in credit because rates are going the wrong way. Is that a worry right now for you, Steve, for the next month or so, that we're going to get some defaults coming out in emerging markets in quite a disruptive way?
The worry is we can get defaults out of emerging markets, but we can also get defaults out of developed markets. I think the shortfall in production, the shortfall in revenues is going to be painful across the world. And I think it is a little bit unfair. I mean, we published a lot saying that if you set aside some of the really volatile emerging markets economies and you look kind of at the middle class of emerging markets economies, their volatility profile is better than that of the smaller G10 currencies, and yet they pay up in money markets, and they obviously don't have the fiscal room that the market gives G10 countries.
Yeah, but I loved your research piece on that this weekend, Steve. I read every word of it, and that's fine. But to John's point, there's a point where with this economic downturn where they need to do a plan, and to get back to the IMF, that's the institution. Do you see a modern IMF that's steeled and ready to act?
I don't see a modern IMF. I think that the formula is lots of credit and less conditionality than in the past. For most of these countries, you can't blame them for what's happening. The question is, can the IMF change its normal framework sufficiently quickly to adapt to the current situation?
Yeah.
Steve, there's a question about what this means for global growth going forward, given the fact that the developing world was responsible for a significant part of that growth. Mohammed Al-Arian writing in and saying the scary thing about the 1980s for Latin America was the lost decade of growth. Do you see a similar type of sort of massive slowdown in a long term based on some of the carnage that we're seeing and going to see perhaps in the developing world?
I would say to the contrary. In some ways, EM, say 1, 2, 3 years from now, looks better. And the reason is that, if you had talked to me 6 months ago, I would have said global demand, services intensive in both in China, U.S., Europe, we want a better gym membership, not another car. I think now there's such a clear shortage in infrastructure on the healthcare side. There's going to be pent-up demand. When we do come back, they actually may do better than we expect. Things look dire now, but if the virus comes under control, either through therapeutic developments or just because it fades, they may actually do well on the rebound here. Because there may be a goods-driven pickup, not a services-driven pickup.
If I can wrap up, Steve, with an industry question that I think many of the institutional audience will be interested in this morning. BMO and Oppenheimer last week abandoned their forecasts on the S&P 500, this on the equity side of things, basically because in this environment you couldn't put forward a forecast. How difficult is it to produce a forecast on the south side right now on Wall Street, Steve?
Well, we've had the experience of being what we considered to be way ahead of the market when we published pieces and discovering 18 hours later that we were now behind the market. It's very hard. You have to be very nimble, and you have this uncomfortable feeling at times that forecasts that look pretty reasonable get out of date very quickly. And you have to convey that to clients and to, basically saying, look, there's a lot of uncertainty and these things can change on a dime.
We appreciate your hard work, as always. Steve England there of Standard Chartered weighing in on foreign exchange and the global economic backdrop, including emerging markets as well. Let's get you some headlines, some news worldwide. We can do that with Bloomberg's Michael.
Good morning, John, Lisa, Tom. President Trump abruptly abandoned his ambition to return American life to normal by Easter, heeding advice from the government's top doctors that reopening the U.S. economy in 2 weeks risks greater death as the coronavirus outbreak accelerates. In a sharp shift from 2 weeks of the measured optimism, the president said his guidelines for Americans to practice social distancing would remain at least April 30th, and he warned that 100,000 people or more may die. Doctors who have studied COVID-19 say it seems unlikely that a person will contract it twice. Dr. Vrashevsky spoke to ABC.
Your body builds up an immunity once you have cleared the virus, but that's completely cleared the virus. In the certain instances where we've seen patients start improving and then get worse, people have been calling that reinfection. They've tested positive on the swabs that we've been using. That doesn't mean that they had a second infection. What likely happened is they made progress against the virus, but did not fully clear it. So at this moment, we do not think you can get coronavirus twice. That being said, more research still needs to be done.
In other news, Phoenix police say one of their commanders was killed and 2 other officers were wounded as they responded to a domestic dispute. Authorities say Commander Greg Kernickel and 2 female officers were called to a home in North Phoenix over a dispute between roommates. Phoenix Police Sergeant Mercedes Fortune.
When officers arrived, they tried speaking with him. He was not cooperative. At some point, he shot the 3 officers, and that's what we know now.
The other 2 officers wounded are expected to recover. Global news 24 hours a day on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Michael Barr. This is Bloomberg. John, Lisa.
Michael Barr, thank you very much, sir. Equity futures positive 8 points on the S&P 500. Thomas went into a deeper lockdown for a much longer amount of time in the United States. Conflicting reports out of China about where we are as we try and reopen things in the world's second largest economy.
Hugely conflicting. I thought Carl Weinberg was just brilliant last night with his China essay on it. John, we got a problem. I'm looking at Afterthoughts distance learning, and she's doing like fiscal policy and deficits in the 4th grade. Should we be interviewing her in a week?
We can get her on maybe next week.
We should get her on next week.
Or after payrolls.
Fiscal policy.
Your youngest can do payrolls Friday with us. Coming up a little bit later this week from New York alongside Lisa Abramowitz and Tom Keene. I'm Jonathan Ferro. We're live on Bloomberg Radio.
25 years ago, NJIT graduate Dick Sweeney co-founded Keurig Green Mountain, a company whose incredible innovations changed the way the world brews a cup of coffee. Today, he lectures widely on business leadership and is a strong advocate for NJIT's work to combine business education with the power of STEM.
NJIT is definitely fostering the innovative thinking for budding entrepreneurs simply because that's the world we live in. NJIT is producing students that have been educated and given the business acumen to be a contributor to a company. The distinct mission is to develop great STEM scholars. The attributes I've always looked for in team members are heart, smarts, guts, and luck. So we want people with passion, intelligence, courage, and never discount luck. The student coming out of NJIT has experienced all of that.
NJIT, New Jersey Institute of Technology. Learn more at njit.edu.
Asset managers who seize change to launch new strategies, add distribution channels, or exploit new technology to re-engineer the investor experience are often rewarded. However, in an industry paralyzed with complexity, few act with agility or decisively. Few run their businesses strategically, yet the most competitive managers in the market know with the right partner and a flexible operating system, you can. Go boldly toward change with SEI Investment Manager Services.
Determination and operational strength are both essential growth in asset management. I'm Steve Meyer, President and Head of the Asset Manager Services Division. We know that disruptive forces create opportunities around the world. If you see potential in change, our industry specialists will maximize SEI's integrated platform of data and risk management, global investment operations, compliance support, and investor services to position your asset management business for success. Come grow with us.
With SEI Investment Manager Services, you lead the charge in a competitive marketplace. Learn more at seic.com/seize-change.
3 is a magic number. 300 schemes to help bugs and bees, supporting environmental needs. 8,000 grants for local sports and performing arts get our support. 7 millionaires every week. The nation's on a winning streak. 30 million pounds to good causes every week. Who'd have thought it? These are the magic numbers.
Your numbers make amazing happen. The National Lottery.
Rules and procedures apply. Players must be 16 or over.
Breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and on Quick Take by Bloomberg. This is a Bloomberg Business Flash.
And I'm Karen Moscow. And U.S. stock index futures are trading higher at the moment, while European stocks are slipping as investors weigh a weekend full of negative coronavirus news against the stimulus measures that triggered a bounce in risk assets last week. Oil is sinking. We check the markets every 15 minutes throughout the trading day on Bloomberg. S&P futures now up 10 points. Dow futures up 24. NASDAQ futures up 39. The DAX in Germany's down 0.3%. 10-year Treasury up 7/30 seconds. Yield 0.65%. The yield on the 2-year 0.26%. NYMEX crude oil is down 6.6% at $1.40. It's at $20.12 a barrel. And COMEX gold is down 0.9% or $15.10 at $16.3860 an ounce. The euro 1.1030 against the dollar. British pound 1.2402 and the yen at 108.19. And that's a Bloomberg Business Flash. Tom, John, and Lisa.
Karen, thank you very much. Numbers we haven't seen in the crude market in 17 years. You've got to go back to late 2002 for the last time we had a 19 handle on WTI crude. Right now, $20.14, down on the session by 6.5%. Tom, down on the year by 67%. Through Q1.
The dynamics are extraordinary, folks. This is oil making a new leg down where you got to believe we're going to test $19. Again, the ramifications of this, Sean, on so many different levels. I mean, we could literally do an entire 1 hour on this and have way more to talk about.
And Lisa, trying to get our hands around whether the bigger shock is the demand shock or the supply shock for this market, there's in a lot of pain.
To me, the story that struck out to me over the weekend was about how some drillers are now paying people to take the oil away from them, basically negative pricing in the oil patch, given the glut that we're seeing and the lack of storage available. Just shocking.
Well, let's talk about that with Francisco Blanch, Bank of America Global Head of Commodities and Derivatives Research. Lucky to have Francisco join us on the phone this morning. Fantastic to have you with us, Francisco. Let's start there, shall we? Are we breaching storage capacity in various parts of the United States?
Thanks for having me, Jonathan. We are not yet, but we are going to get there very soon.
Remember, you were asking before, what's the bigger shock? Is it the demand shock or the supply shock? Well, it's the demand shock. We think that demand will be down 17 million barrels a day in the month of April globally. Remember, that's a 17% decline on a 100 million barrel base. So the supply shock, by contrast, I think is probably going to be about 3-4 million barrels in April. So now we're looking at a massive glut that we've never seen before.
When you say, Francisco, demand goes down 17 million barrels, what demand drops? I mean, what usage causes that drop in demand? Do we stop? I mean, is it John stop and using Ubers and the Bentley and all that? What causes it?
Well, so first of all, I would say the most impacted sector is airlines. In the U.S. alone, we've seen traffic down more than 85%. Tom, 85%. I mean, we've basically shut down most domestic travel. In Europe, we can see similar numbers, down 80-90% across most countries. If you look at China, however, which is interesting, the drop there also was about 85% at the trial. However, they've only recovered to around 40% of normal levels, despite having been dealing with the virus for 3 months. So clearly, the airline sector is the most impacted one, followed by you asking about Ubers, and I think a lot of people are working from home now, so that's a lot of restaurants are shut down. Basically, people are losing jobs. So there's a lot of people staying home, either because they don't have jobs or because they're working remotely. So it's also hurting gasoline demand. We're hearing numbers down 30, down 40% year on year in gasoline demand here. So it's really across the board, but the most impacted sector is the airline sector.
So going forward, Sebastian Gailey of Nordea Bank earlier in the show was saying that he expects oil to go back up to $45 a barrel at some point in the not-so-distant future. How realistic is that, and how long-lasting is this period of time where we could see sub-$20 a barrel oil?
So we are looking at this crisis in looking at two main parameters. One is the depth of the initial drop, and then second is the duration of the crisis. I think we have a reasonable handle on the drop. We think 17 million barrels a day is the right number. It could be 20, it could be 15. Again, it's hard to tell, right? There's a lot of guesswork going on here. But then the duration is a little more complicated. In China, as I said before, we started to see a very modest recovery. Although, for example, traffic, which also took a big hit in China, is back to about 85% on normal, so roughly down 15% year on year, as opposed to the numbers of 40-50% earlier in the first quarter. So those are the key numbers, really, to watch, the recovery rate.
Do you just assume a weak bundled commodity index? Do you just assume weaker Aussie dollar versus the yen or other metrics? I mean, is it just a fade away for commodities?
It's going to be a little bit of fade away for a little bit, but then remember the other thing that's going to happen, Tom, in the second half of the year, maybe in 2021, is that we are going to lose a lot of supply. Either because in cases like copper, we have 15% of supply at risk, or in cases like oil, we're just going to decimate investment across a broad range of regions, which in turn will lead to a supply decline into 2021. And then as it relates to agriculture, there's been news about potentially some agricultural commodity producers facing coronavirus risks as well at their plants. So I think the biggest risk really is again, demand goes down initially, prices go down, but then as we recover, we will have hurt our productive capacity, and that's what leads to the price rally at some point in the recovery cycle. Whether that's end of 2020 or 2021, I don't know. It depends on how long this crisis lasts.
Francisco Bludge there of Bank of America weighing in on the commodity route, the crude route specifically. And Tom, duration is one of the most important variables of this whole crisis, and it's one of the most difficult variables to really predict and forecast at this point.
Yeah, well, the duration, and not only that in the commodities. I mean, I thought Francisco was brilliant there, John. Just copper is one dynamic. It could be iron ore. It could be, for that matter, live cattle. I mean, the whole commodity matrix on the screen and the charts technically is really ugly. I put out early this morning, John, Texas Intermediate logarithmic, and it's like teach a class. It's like such an elegant, perfect chart moving south. It's an ugly chart
this morning. Let me tell you, we're down 9% on Brent, down 8.78%. We are down 6 percentage points on WTI. A crude route, and it continues. Up next on the program, I'm pleased to say, we'll get you a view from the Federal Reserve. We'll be catching up with the St. Louis Fed President, Jim Bullard, right here on Bloomberg Surveillance, alongside Tom Keene. I'm Jonathan Ferro. Together with Bloomberg's Lisa Abramowitz, it makes Bloomberg Surveillance.
Business is constantly evolving. Is your financial printer evolving to keep ahead of the curve? At Command Financial, we are redefining financial printing by providing industry-leading expertise, leveraging technology, and honing processes and best practices. Every day, Command helps SEC registrants, as well as members of their working groups, including securities attorneys and investment bankers, prepare, file, and disseminate regulatory and disclosure documents, such as registration statements, M&A documents, and mutual fund prospectuses and reports. Command provides a full range of services to help you effectively complete your deal, meet your disclosure requirements, and achieve your shareholder communications objectives. Visit our website at commandfinancial.com and learn how we're evolving, not only with the times, but also with your business requirements. Command Financial, redefining financial printing.
Imagine being denied an apartment because of your religion, or your race, or because you have children, or a disability.
It's so wrong. Yes, but who has the power to stop this?
You do. Each of us has the power. The law is on your side. It's illegal for landlords to discriminate because of race, color, religion, sex, national origin, disability, or familial status. If you suspect that you have experienced housing discrimination, file a complaint with HUD immediately so we can investigate it. Fair housing is your right.
Use it.
To learn more, visit HUD.gov/fairhousing. That's HUD.gov/fairhousing. Or call 1-800-669-9777. 1-800-669-9777. A public service message from HUD in partnership with the National Fair Housing Alliance.
What am I saving for? My passion, food photography.
I trained to be a landscape garden designer.
Open a food stall and sell my famous fish tacos.
I go to stuntman school.
I'd be a wedding planner. I'd start a dog grooming business. Sorry, we'd start a dog grooming business.
What are you waiting for? Make your one day happen with a Fidelity Stocks and Shares ISA. Your capital is at risk. Tax rules may change. Full terms for our Stocks and Shares ISA are available on our website. 18 plus UK residents.
Hiya, it's Mel B. I'm just calling to say whether you're searching for a babe, a boo, or a bit of fun, there's one B you can always rely on. Badoo, the dating app which matches you with people based on your interests. Now more than ever, we want to be connected. You're more than just a photo, so be your true self and connect with a like-minded community. There's a new B in town. Download the Badoo app today. Badoo, date honestly.
On this week's On the Media, we are awash in messages, but some messengers are more effective than others.
Ventilators, ventilators, ventilators. We need 30,000.
Meanwhile, some media outlets choose not to air the president's press briefings live, and media critics ponder what's the right balance between good information and all information. All that and more on this week's On the Media from WNYC. Listen to the On the Media podcast on TuneIn today.
TuneIn makes it easy to be a part of the conversation. Just make sure push notifications are enabled to hear about breaking news and trending topics from around the sports world. You'll also get custom recommendations of podcasts and radio stations covering the sports and teams you care about.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
Broadcasting live from the Bloomberg Interactive Brokers Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119 and around the globe. The Bloomberg Business app and BloombergRadio.com. This is Bloomberg Surveillance.
From New York City, this is Bloomberg Surveillance for our audience worldwide. We are live on Bloomberg Radio, where equity futures grind higher by 17 points, up by around about 0.7%, 1 hour away from the opening bell in New York City. Here's your bond price action. In the Treasury market, yields shaping up as follows, coming down 2 basis points to 0.65%. And in foreign exchange, a weaker dollar story through much of last week, stronger against everything in G10 this morning. A huge week ahead for the data. On the data front, we have the ADP report, initial jobless claims, and payrolls Friday coming up as well. How will the Federal Reserve interpret all of that? We can try and answer that question right now as we head over to Bloomberg's Michael McKee, sitting down with the St. Louis Fed President, Mr. Jim Bullard, right here on Bloomberg Radio.
Well, thank you very much, and we would like to welcome St. Louis Fed President Jim Bullard to Bloomberg Television and Radio Worldwide. Thank you for joining us this morning. I want to see if we can't catch up a little bit. About 10 days ago, you predicted we could see unemployment as high as 30% in the second quarter, and you called for a massive stimulus program. We got a massive stimulus program, so does that change your forecast for unemployment and growth?
Yeah, thanks for having me this morning. I did want to see pandemic relief. I wouldn't call it stimulus. I would call it pandemic relief. What I interpret the program as trying to do is stabilize incomes and stabilize businesses as we work our way through this investment in our national health over the next couple of months here. On the unemployment, we do have a blog on this. If you read the blog carefully, you'll see that there is a way to bound the unemployment rate. It's going to be somewhere between 10% and I think the upper bound is like 42%. But that's because we're just identifying vulnerable workers in this environment. And what's going to happen is that those workers, some of those workers are going to have to seek relief so that they can pay their bills through this period. So we're expecting the unemployment rate to spike, but let's call that pandemic relief. Then they can pay their bills, and once the virus goes away, then we'll be able to return to normal. So hopefully, if this all works smoothly, and there's a lot in the legislation as well, we'll be able to come out on the other side and get the economy rocking again.
Well, Wednesday is April 1st. Mortgage payments are due, rent payments are due, utility bills are due. Could we have a problem if people can't pay their bills on Wednesday?
My sense is, of course, we're in a crisis situation, but my sense is that everyone really understands what's going on here now because obviously it's been the topic number one, not just in the U.S., but around the world. So I think people pretty much understand that the relief is supposed to enable people to pay their bills as best they can. There might be some delays and things. You'd expect that in a crisis situation, but by and large, I think there are plenty of resources in this fiscal package to handle what we're going to go through here.
Well, the Main Street lending program that you guys have announced is in the package. How's that going to work, and when does that start?
That's in the design phase right now. So I think from a firm's point of view, there are two ways to handle the crisis. One would be the traditional way, which would be to shut down temporarily and send the workers over to the pandemic relief or unemployment line. And a lot of that is going to occur. That's already occurred. We saw with the claims number last week. And that's okay. You're getting, and the unemployment insurance benefit is beefed up. So they're going to get closer to 100% or maybe 100% of what they would have gotten had they just continued to work. So I think that's one way to go. But if the firm goes in that direction, they might lose connection with their workers. So another direction to go is to go to the Small Business Administration, get a loan, which is ultimately forgivable if you meet certain conditions, mainly that you keep your payroll more or less intact. So if you go that route as a firm, then you might be able to retain all your workers, and then when the startup occurs later, you'll be able to have the same workers, and you don't have to go hire all over again and get your business ramped up again. So that might be a better way to go for many companies. If companies decide to go that way, then we'll see lower unemployment and more uptake on the SBA loan side.
Your district has a lower incidence of infection rate at this point. So what's happening in your district? I normally ask you what the CEOs are telling you, but I also want to know what mom and pop are telling you from the mom and pop stores.
Yeah, we do have a lower rate of infection, but boy, it's pretty quiet. Where I live here in the St. Louis metro area, most things are shut down. People stay at home. So that makes me think, and just reading about it across the country, that the idea that there's a lot of regional variation here is probably not the right way to think about this. I think pretty much everywhere has bought into the idea that you should be very careful about going out and very careful about spreading this virus. Also, I think another thing to keep in mind, this is not just things that are ordered by health officials. This is individuals and families making their own decisions and businesses making their own decisions about how they want to handle the situation. So what you have is a kind of private sector and household response to the crisis, which includes them not wanting to get sick and not wanting to get others that are in their circle sick. So because of that, regardless of what the health officials would say at this point, I think everyone wants to basically stay home until this virus goes away. And so because of that, I think all across the country, you're basically in a partial shutdown situation.
Let me ask you a couple of things about the bill that passed and the Fed's new powers. The language in the bill says you can buy corporate bonds down to the lowest rating for corporates. And those are obviously the ones who are going to need the most help, but they're also the ones most likely to see their ratings downgraded into junk, which in theory you can't own. So how much risk are you willing to take on?
Yeah, well, we've got to think about exactly how to execute on that one. But the main idea of a program like that is to restore basic market functioning, which broke down as this crisis broke out here. So I think we've got backing from the Treasury. That's a 13.3 program, very powerful, and I think we'll be able to keep price discovery going in that sector there.
Muni bonds also getting a nod in the bill. Is that going to be a new program to buy munis, or are you just going to use the existing program that you set up last week?
Well, again, I think intervention in that kind of market is mostly that we want market functioning to occur. So I think investors got so worried about state and local government that they started to pull away from those kinds of investments, which have historically been pretty solid. So hopefully we'll get price discovery going again, and I think the market will actually be fine here. Again, I think there are plenty of resources in the bill to handle our current situation, and that should reassure investors that state and local governments will be made whole here.
The law of unintended consequences is kicked in the mortgage market. The big, massive purchases you've made at MBS are now leading to big margin calls for brokers. Is that something you can do something about, or are there other possible unintended consequences you worry about?
We have heard reports of that, and I think that the MBS purchases can be adjusted so that we get sort of accurate pricing in that market to meet the needs of those that are producing MBS. We'll see how that goes. That's a very minute-by-minute kind of decision on intervention and purchases of MBS. But we have a great team in New York that's working on that, and I think we'll be able to get good outcomes there.
I'm wondering, when you think about where all this leads, what you see ahead. You're going to have trillions in additional national debt. You're going to have billions in loans out to companies at very low rates. Can you raise rates, or are you pretty much stuck forever now?
Stuck forever. I think near term, as we come out of this, interest rates will probably stay very low for quite a while. We are taking on more debt as a nation. But we're taking it on at very low interest rates, so that part should work well for the near term. As we get further out past the crisis, we'll have to evaluate our fiscal strategy and see but that'll be up to Congress what they want to do. It's a big country. We can carry 10% more debt. It's not ideal, but we can certainly do it. And if there was ever a time where you wanted to do something like this, now is that time.
One last question here. Someone said when you first cut rates and set up lending programs, you were throwing the kitchen sink at things, and then you cut rates again and set up more programs and threw the kitchen sink again. Do you have more than one sink, or do you throw the same sink over and over again? Basically, what's left in the toolbox?
Well, I think the bottom line is that these 13(3) authorities that are in the Federal Reserve Act are very powerful, and because they're set up to allow the Fed to do lending in unusual and exigent circumstances with the consent of the Treasury, and so you can do a lot with that, and I think that's what we're seeing right now. And if we had to do more with that, we could. It's a Board of Governors program. It's not an FOMC program. It's a board, and we do need Treasury authority. But in special situations like this one, and what could be more special than this one, makes a lot of sense to go ahead and use that power and see if we can smooth out this ride as we get to the other side of this virus.
Very quickly, do you think baseball season starts this year? You're a big Cardinals fan.
I am. I haven't seen anything about baseball so far. So I was actually, I don't know about you, but I was, one of the aspects of this crisis is I was very shocked when sports decided to shut down. That really jolted me. So one of many jolts during this crisis, but it was shocking.
Jim Bullard, president of the St. Louis Fed, thank you very much for joining us this morning on Bloomberg Radio and Television Worldwide. We'll send it back to you guys.
Bloomberg's Michael McKee there, weighing in on the situation with the Federal Reserve alongside the St. Louis Fed president, Jim Bullard. Tom, I don't know about you, and you, Lisa. I found myself watching football games from 20 years ago, watching the highlights of seasons 20 years ago over the weekend. Just trying
Lukawa also.
Yeah, just trying to keep in touch with sport.
Yeah, I did do that. What I know is Bullard mentioned he's a Cardinals fan, and Vet Bill started barking right away.
Well, Vet Bill's Red Sox, right?
A diehard. Well, no, he loves the Dodgers. He likes the style.
Loves the Dodgers. Okay.
Yeah.
Haley from Beverly Hills got him into the Dodgers. He's got the coat and the whole thing.
Well, Vet Bill can come on and talk about the Dodgers.
We're talking about Jim Bullard here. We got to go to break. We got to come back and talk about this. I mean, what are these guys supposed to say? I mean, they got to wait to see what happens.
We're going to carry on talking about this. We got Mr. Kasman from JP Morgan joining us now. Bruce, great to have you with us on the phone. Fantastic to have you with us, in fact. Let's talk about the Federal Reserve. They don't meet again until April 29th. We've learned that doesn't really matter. Do you expect anything else from them anytime soon?
Well, there's a lot of details to come out, especially about this Main Street lending program. And I think they're going to roll with the punches here. And as I think you heard from Bullard, and we've been seeing, the Fed is very creative and very aggressive here when it sees a problem. So I wouldn't rule out more Fed action, but we're not forecasting anything specifically at this point.
Bruce, we're making it up as we go. And all of our listeners, whatever their level of sophistication, know that. What's the attribute of how we make this up as we go that we should focus on?
Well, I would say from the point of view of government policy, there's two pieces to this. One is not making it up. We've gone through the global financial crisis. We've dealt with issues that have threatened systemic stability. We've kind of created an infrastructure around that, and we're drawing on that. And that's a really good thing, and it's happening really quickly. The thing that's really unique about this crisis is how much we're hurting individual small businesses in a targeted way in a very short time. And that's where making things up in terms of getting these loan programs out, having the Fed do a remarkable amount to actually become a creditor to the corporate sector at the lowest level is really starting to be kind of really unprecedented. And as you say, it's really making things up. So there's some of this which is got a very good toolbox, but there definitely is some stuff here which we're really responding in an unprecedented way.
I want to talk about the unprecedented function here, the fiscal stimulus function right now of the Federal Reserve, essentially, with the $450 billion they're being provided by the U.S. Treasury that they're going to lever up and lend out. How are they going to do that, given their staffing and expertise?
Well, I think to a large degree, they're going to work through banks and other financial intermediaries. The SBA is basically going to guarantee loans taken by banks. The Fed's going to oversee it. Treasury is going to oversee it in some ways. But you have to work through the channels that exist. If you had to have the Treasury and the Fed manage the individual loan decisions that are being made here, we'd never get things out. And this is a big issue, even going through the banking system, even going through channels. As Bullard was saying a few minutes ago, we know unemployment is rising. People are being laid off. The question is, can you get the money into the system quickly enough to limit the damage, cushion it, provide us with a sense that not too much damage is being done once the economy turns on the lights again?
Bruce, that's where I wanted to go. This question of speed and the sense that it needed to be done last week, 2 weeks ago, not now, and we still don't have the program up and running. And I'm wondering, do you have a sense of how much of the damage has already been done in an irreversible way in terms of layoffs and small businesses that have to shut down?
I don't think we know. We can see a hint of that in last week's claims numbers. We know there's going to be a huge rise in unemployment in the next month or two. How many businesses close, I don't know, but it's going to be a lot. And let me just say, because I think there's an interesting international comparison here. Europe has a system where institutionally it's a lot harder to have that flexibility. And I think over long periods of time, flexibility has been very helpful for the U.S. But in this situation, their structures, their programs have actually provided a very important circuit breaker. And I don't think you're going to see unemployment rise in Europe anyway, like what we're expecting to see in the U.S. in the coming few months.
Why can't we be like them? It's a brilliant insight, Dr. Caswood. Great. Okay, everybody out there wants us to be like Europe for a cup of coffee, maybe 3 cups of coffee, maybe out to the 4th of July. Why can't we Europeanize and then pull back and become like we are later on?
Well, I think that's in some ways what we're trying to do, although to be accurate here, we are still largely providing the support to income, to people who are laid off, providing checks to people. We're not doing what the UK is doing, which is providing companies support for their payrolls. We're not doing what the German government is doing in terms of subsidizing short-term work. I mean, that's a good question. I mean, there's the institutional side, which you can't change at this point. But the way our approach is going on policy could be different, but it is definitely a different one right now than what the Europeans are doing.
The backdrop to give you guys a window into this listening across this nation is J.P. Morgan launches, off the great work of Robert Mellman from years ago, a 15-page report Friday evening, which is a must-read on Global Wall Street. And Ferroli waltzes through with the U.S. view, and then Kasman drops in with the global view, and it's just absolutely brilliant. How many people put that report together, Bruce? Literally 15 people, right?
Well, globally, no. We've got actually a bit more than 30 economists.
Yeah, exactly.
Contributing to.
I mean, it's just extraordinary. And so I'm absolutely fascinated by what the American outcome is if the EU approach works so well. Do you just assume income substitution 2, income substitution 3? I mean, is that where we're heading?
So I think the issue here is you got a tension, because just remember, when we get to the point where we turn the lights on, and that's a big call when the virus starts to fade, when we begin to take the restrictive policies off, you're going to get a huge bounce in growth. You're going to have some rebound. The question really is how much lingering damage is done, and whether the cushions we put in place here make it such that we can come mostly back to normal. And our view is we're not. We have a big rebound in the second half of the year. We have the U.S. growing at a 9% pace in the second half of the year, but that still leaves output 3 percentage points below where it was on the path we were following. So there's a lot of damage we think is going to get done, and this is going to take a long time to heal. We hope it's not going to be like the global financial crisis, where really we haven't healed fully from that damage. But, it's way too early to kind of judge how the path ahead is going to be filled. And, the other thing here to just keep in mind is the amount of debt that's going to be needed both on the public and private sector side to fill the gap in the next few months is going to be an overhang issue that the ramifications of which we still really, I don't think, understand.
The ramifications of which everyone is trying to understand with whatever data, however sparse it may be, is that we have. We're speaking with Bruce Kasman, J.P. Morgan's chief economist, managing director of global research. And Bruce, you're the perfect person for us to speak with, given your intersection of working at the New York Fed and the sort of mechanics of the market, as well as working globally and covering everything as a senior international economist at Morgan Stanley, ahead of J.P. Morgan. And I'm wondering, as we head forward, a key question is, are we poised for a inflationary or deflationary environment going forward? What's your take on that?
Well, I think over the next 6 months, it's pretty clear it's going to be deflationary. Just look at what oil prices are doing. The service sector is much bigger than goods-producing industries, which might have some supply chain pressures. So you look at the entertainment, hotels, airlines, things of that. Inflation is going to come down sharply. The question is, where do we come out of this? I think certainly for the next couple of years, you have to believe the rise in unemployment, the weakness in growth that's not going to be completely paid back. It's going to be disinflationary. We'll have negative inflation in the near term. We'll have low inflation. And obviously that's a big challenge for central bankers who have already been having a very hard time getting inflation up over the last decade.
So what does that mean in terms of how much debt some of these developed markets can incur?
Well, I don't think there's a real constraint on the public sector side, especially given how low interest rates are and how much central banks are supporting in terms of the funding. I think the bigger issue for the next couple of years is really the buildup of debt on the private sector side and how much that hinders the recovery once we get back to more normal conditions. Over a longer period of time, the buildup in public sector debt has issues that particularly I think in Europe is an important issue where there's not enough burden sharing going on across countries. But that's more of a chronic issue, which has, I think, it's hard to figure out exactly how that's going to affect us over the next 5-7 years. There's so many things we don't know about the next 3 months, so it's hard to go there at this point.
Bruce Kasman, thank you so much for joining us today. Greatly, greatly appreciate that. Bruce Kasman is with J.P. Morgan. Just a lot of good effort there by his team to keep us informed here and the different views forward as well. Lisa, not as gray a day in New York as it was yesterday. Yesterday was just, with the clouds sucked in, it was just gray.
Yeah, given the fact that everything was closed down and you could hear the sirens, to have a sort of mood track in the background of just rain and haze for 2 days. Not exactly uplifting, I gotta say. You had some beautiful pictures, though, I gotta say, of those tents being built outside your window.
It's chilling. They're up and running tomorrow. I'm standing up here in the surveillance living room, tripping over Vet Bill. And, they're putting up some new tents right now, Lisa. I can see them down there. There must be 20 people down there with the New York Police Department helping it out. And it's just a shock. I mean, it's a pleasant lawn here. It's one of the most famous lawns at Central Park, where kids play every afternoon after school. They drift across from the east side over to Central Park and Play, and now it's a tent hospital. That's a pretty grim sight. It
is grim, as well as the images of the body bags. I will say, Tom, this morning you have the coronavirus in the background. Oil very much taking the center stage, and I would say certainly from markets, not from the human side, but from the market side, this question of how low can it go as the world runs out of storage facilities for crude. And to me, I just have to think the ripple effects here are dramatic, and the question is, have we seen the scope of them, or is there a lot more to go? And I was speaking with a bunch of traders over the weekend. That was the key question.
Yeah, well, absolutely. And again, as we talked to Francisco Blanch, it's not just about, oil specifically, it's about commodities and the growth reaction. West Texas, $20.65, Brent crude, $23.05, and of course the acclaimed 19 handle on West Texas early this morning. But to me, it's just the weight of commodities. And within the research reports over the weekend, it's just this mystery of the duration of cratering economic growth. I mean, we can guesstimate all we want, Lisa, but, second quarter became third quarter, and now it's sort of got a second halfy feel to it.
Yeah,
that's what I'd call it.
And then there's the financial market response. I mean, just to put this into perspective, about 1/10 of the high-yield bond market is tied to energy companies, and 1/10 of the BBB rated tier in investment grade also tied to energy companies. What happens to all of those companies? Can they survive this? Will they get credit? Right now, nobody wants to extend it. So, I mean, these are some of the questions underpinning the activities in the market this week.
And one of the key statistics over the weekend, folks, in terms of this lockdown and forced stay at home, it's about 1/3 of the states, but it is half of our GDP generation that is essentially sequestered. As Lisa Abramowitz and I are, we're thrilled you're with us. Thank you for listening on all of our digital products from your home. This is Bloomberg. Stay with us.
Where will 2020 take you? Somewhere where people care about each other, about our planet, about creating a better world for everyone, and becoming the best versions of yourselves. Join a community of like-minded individuals at the University of Winchester. Apply by the 31st of March for a chance to win your first year in halls. Visit our website to find out more. See the bigger picture. Be the difference. Go to winchester.ac.uk.
This is a vital update from the government about coronavirus. To help save lives, stay at home. Anyone can spread coronavirus. Only leave your home for the following reasons: to shop for basic necessities, to pick up medicine or to provide care to those who need it, to exercise once a day, alone or with members of your household. Only travel to work when you absolutely cannot work from home. If you have to go out for any of these reasons, always stay 2 meters apart. Do not meet others outside your household, even friends and family. Stay home. Protect the NHS. Save lives.
Listen to Raj go. Polyrhythm, paradiddle. A drum solo so epic, he nearly forgot his mom's birthday back in Delhi. Good thing Raj has Western Union on his phone and can send money quickly online. Download the app today. This service is provided by Western Union. FX gains apply.
Want to know a great way to discover the latest and greatest sports audio on TuneIn? It's easy. Just make sure push notifications are enabled on your phone to receive recommendations of sports talk radio and podcasts, along with important breaking news updates.
Want to know a quick, easy way to see if your favorite podcasts have a new episode available? Just go to the home screen on your TuneIn app and see the latest editions under the Your New Episode section. Happy listening.
Next time on the New Yorker Radio Hour, I'll talk with our Washington correspondent about the many political battles being waged in the Capitol over how to deal with the new coronavirus.
You couldn't imagine a president personalizing a crisis with a virus, but somehow that's where we are.
Susan Glasser. Listen to this episode of the New Yorker Radio Hour on TuneIn today.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
This is a Bloomberg Money Minute. Stock futures have been fluctuating between gains and losses this morning. Investors are weighing a weekend full of negative coronavirus news against the stimulus measures that triggered a bounce in stocks last week. This morning, S&P futures up 21, NASDAQ futures up 73, Dow futures up 121 points. Over the weekend, the nation's top infectious disease expert, Dr. Anthony Fauci, said that U.S. deaths from the coronavirus pandemic could reach 200,000. President Trump abruptly abandoned his ambition to return American life to normal by Easter and said guidelines to practice social distancing would stay in place until at least April 30th. The big annual auto show in Detroit is not going forward this year in June because of the coronavirus pandemic, and now the TCF Center will be repurposed as a field hospital for COVID-19 cases. Organizers of the event say that the show will resume in 2021. Gina Cervetti, Bloomberg Radio.
Our relationship with Asia is simple. Find the most experienced journalists.
These countries will need each other more and more in the future.
Let them gather the best data and experts.
Let's get to Singapore now and our guest.
Then bring everything they find straight to you.
Let's talk about where you are. There's quite a lot of headwinds there too.
Actually, it's not simple. It's just better. Bloomberg Daybreak Asia, tonight at 6 Eastern on Bloomberg Radio, the Bloomberg Business app, and BloombergRadio.com. Bloomberg, the world is listening. We have to get it right the first time.
We always talk about the losers in a trade war.
You benefit if you're just further away from China.
So that you can too.
What are the ramifications if she crumbles or doesn't crumble?
Bloomberg Radio, the Bloomberg Business, Radio.com, and iHeartRadio apps, and BloombergRadio.com. Bloomberg, the world is listening. From the financial capital of the world, 24 hours a day at Bloomberg.com, on the Bloomberg Business app, and on Quick Take by Bloomberg. This is Bloomberg Radio. This is Bloomberg Surveillance Economics.
We are being taken out of our comfort zone by the coronavirus.
Dollar weakness is pretty much a good thing for a lot of the rest of the world.
Finance.
We are going to see a global demand contraction this year, most likely, for oil. The financial health of the business sector has deteriorated somewhat.
Investment.
Obviously, the value in high-vol stocks are going to continue to suffer.
It looks as though the bond market is talking itself into a recession here.
Bloomberg Surveillance with Tom Keene and Paul Sweeney on Bloomberg Radio.
Good morning, everyone. Bloomberg Surveillance from not our studios in New York, but from Paul Sweeney and Tom Keene's house. We are remote. We welcome you to a remote surveillance. Our wonderful team helping piece this together for us really remarkably seamlessly. We thank them so much. We welcome all of you on Sirius XM Channel 119 and particularly on our digital product. There's like 42 ways, Paul. I haven't even discovered them all. There's 42, maybe 43 ways to get us on digital. It's a very cool thing. You take it for granted until, boom, you really need it.
Until you really need it, and then we really need it right now, and our listeners need it, and it brings us worldwide, Tom. So a lot of digital product out there for folks to get Bloomberg Radio.
Thank you for your many comments and responses as well, particularly on the rudeness of Vet Bill barking here. Earlier on, Paul, we're trying to have a vet bill free hour here. We'll see if we can
She's always
do that.
welcome.
Paul, oil just spiked. I mean, we got lots to talk about here. Oil down, particularly Brent crude down, and there was a single headline. The president will speak with Mr. Putin today on oil. We'll see.
Yeah, it's just extraordinary, between the Saudis and the Russians, getting into the supply spat in the face of this cratering demand just seems insanity.
Yeah. $20.52 on oil, make that 20.49 on West Texas Intermediate. Of course, we had a 19 print as well. Just because of the scheduling here, let us get right to it on a Monday morning, looking at the individual stock stories in this crisis. Our David Wilson.
Since you mentioned energy stocks, it's worth noting that they're coming off their early lows. ExxonMobil's down about 1% in early trading. Chevron's only down 0.75%. And in oil services, you've got Schlumberger down 2.5%. And you've got gains among drug companies that are getting into the COVID-19 area. Johnson & Johnson, those shares up about 3%. The drug maker said it's identified a COVID-19 vaccine. J&J is looking to begin trials by September and bring out the vaccine early next year. The company and the U.S. government are joining forces to spend more than $1 billion on research and development, and J&J is expanding manufacturing as well. And then you have Abbott Labs up 9.5%. The medical product maker introduced a coronavirus test that works in as little as 5 minutes. Abbott said it plans to supply 50,000 test kits a day starting Wednesday. U.S. regulators cleared the product for emergency use. Then you turn to the travel stocks. They're taking another hit today. You've got American Airlines down 7%. United also down about 7%. You've got an estimate out of Sanford Bernstein that the two carriers are about 2 months away from running out of cash. The firm estimated Delta Airlines would have about 5 months and Southwest would have about 8 months. Those shares also lower, though not quite as much. Delta down about 5%, Southwest down 3%. And then you go right to Boeing. You see they're down 5%. The plane makers lower after climbing last week for more than 70%. Data compiled by Bloomberg show that was the biggest weekly gain since at least 1980. And in the previous 5 weeks, Boeing had plunged 72%. Now it's only made back a bit of that loss. You turn to the cruise line stocks. Carnival's down 7%. The company's Holland America unit said its ship Zaandam has 73 passengers and 116 crew members who reported flu-like symptoms. 4 travelers have died on that ship. The Zaandam and sister ship Rotterdam received approval to use the Panama Canal. You're seeing declines among other cruise line stocks as well. Royal Caribbean lower by 6.5%. Norwegian down 8%. General Motors up 4.5%. President Trump praised the automaker's work on hospital ventilators in a news conference on Sunday. That's 2 days after he used federal law to force GM to make the devices faster and for less than planned. On the other hand, you got Ford Motor down about 1%. And I've got to mention a couple more stocks. Zoom Video Communications up 5%. This is the online video conferencing company. The shares have more than doubled this year as the coronavirus outbreak spurs demand. Zoom's ticker, by the way, is ZM. U.S. regulators halted trading Friday in a small Chinese company whose ticker is Zoom. A lot of confusion there, as it turned out.
That's amazing.
And then there's Cheesecake Factory. The shares are up in early trading by about 12.5%. And this is after the restaurant chain disclosed last week that it's not going to make rent payments due on Wednesday. And Guggenheim lifted its 12-month price estimate for the shares by 15% to $30.
That makes no sense at all.
That's a heck of a question, Tom. I'll leave that for perhaps another hour.
Bloomberg Stocks editor Dave Wilson, thank you so much. Yeah, that doesn't make sense to me, but that's the market we're in today, Tom. So we know the coronavirus is putting stress on all aspects of the economy, Tom. That includes our good friends at the large banks as well. It's just really interesting. We'll have to see kind of how this works. Arthur Levitt, former chairman of the Securities and Exchange Commission and a Bloomberg LP board member, joins us now. Arthur, talk to us about the big banks. How are they faring here, given the tremendous tumult of the coronavirus?
Well, against the coronavirus, the Fed's banking stress test doesn't look so bad. The annual stress tests due on April 6th are meant to gauge if banks would survive a hypothetical recession that sends the market plunging and oil into a tailspin and loans to fall going through the roof. So the new coronavirus has people wondering whether this year is even worth it. But if you look at the Fed's severe recession formula, it imagines gross domestic product dropping 9.9% and the Dow falling to 18,623 by the end of June. So last week, Goldman Sachs projected a 24% drop in second quarter GDP. The bank estimates are not that far off. And the Fed on Tuesday said it was going to relax some examination work.
Arthur, 3 days ago, Reuters talked about a given bank having derivative exposure in oil as oil prices plunged. And the CFTC came in and provided relief. Two of the sources to Reuters suggest it was Capital One. Keep the name out of it. Let's say we don't know which bank it was. How do people like you, as the arch regulator, handle a bank crisis? I mean, do you try to keep it secret while you're handling a bank crisis? What do you actually do when the phone rings and they say, hey, we're in trouble?
Well, we send our people in to evaluate the finances of the institution. We don't keep it quiet, though. We don't hide it under the rug. We would force the banks to make announcements as to their situations. We wouldn't ourselves at the commission announce it, but we'd force the banks to reveal this as soon as they knew it.
Yeah.
That's the whole mantra of full disclosure.
So again, this year, Arthur, do you think the stress test do you think the Fed will cancel or maybe even delay the tests, or how do you think that they might play it?
I don't think so. I think they will continue the tests. And the tests aren't that far off reality. So I think they'll be very useful for investors and very useful for our capital system as a whole. I don't think the Fed will cancel the tests.
Arthur Levitt, thank you so much. Former chairman of the Securities and Exchange Commission and Bloomberg LP member of the board, and just can't say enough about his perspective in this crisis. Arthur Levitt with us as always. Paul, just by chance after David Wilson spoke, I had to decide which cheesecake I would have at the Cheesecake Factory. And we narrowed it down after careful living room acclaim to key lime cheesecake, key lime pie in a cheesecake, deliciously tart and creamy on a vanilla crumb crust. But they got to get people in the door. I mean, you've got a lot of experience in this. How do you do securities analysis of an industry that's just stopped?
Yeah, it's just to put it. It's just extraordinary, Tom. I mean, the revenue you have to model in there is. I mean, you've never had to do these kinds of declines before. So it's a question of, how do they manage their costs and how do they manage their liquidity? And that's really what it comes down to for most of these businesses that are hurting. Is just managing the liquidity. Pay the bills that you can pay. Manage your cash as best you can, and that's basically the story right now. It's survival mode.
And then, to be clear here, Bloomberg Intelligence, which, folks, he's too modest to mention Paul. Paul, we don't do buy, hold, sell. I get that. But on the street, within the CFA Institute, if it's this unknown, aren't you almost forced to suspend buy, hold, sell until you figure out what's going on in an industry that directly affected?
It very well could be the case. It depends. A large part of I think a lot of the analysts probably, talk to companies, getting a sense of kind of where their business is in this new world. Do they have a takeout business? Do they have any kind of other revenue here, or is it just literally going to zero? And then it simply becomes a question of really looking at your cash flow statement to see how much cash do you have versus how much debt do you have. What are your payments you have to make? You have to make your interest, your principal on your debt. Can you stretch out your payables to your all the other vendors? And it's just really becomes a question of looking at that cash flow statement.
Yeah. Paul, I put out a tweet this weekend on, as you say, the takeout business. And this was, for our listeners nationwide, there's all different vendors doing this. You just wonder, I just don't see the takeout business as a replacement.
No.
But, we'll have to see how that plays out. Fascinating. We say good morning to all of you, just flattened, just devastated by the restaurant business. With our news in New York City, here's Michael Barr.
Thank you, Tom. Thank you, Paul. President Donald Trump says the death toll from the coronavirus could exceed 100,000 people in the U.S. An advisor to the White House Virus Task Force says that number could be 200,000. Dr. Anthony Fauci says it became obvious in recent days that an extension of social distancing guidelines was needed through the end of April.
We felt that if we prematurely pulled back, we would only form an acceleration or a rebound of something which would have put you behind where you were before. And that's the reason why we argued strongly with the president that he not withdraw those guidelines after 15 days, but that he extend them. And he did listen.
Help is arriving in New York City. A Navy hospital ship, the Comfort, will dock in the city today. The ship will not treat people with the coronavirus, but will help ease the burden on hospitals in the city. The ship has 1,000 beds and 12 operating rooms to take on non-coronavirus patients. Israel's Prime Minister Benjamin Netanyahu will go into quarantine after being in contact with an aide that tested positive for the coronavirus. Global news 24 hours a day, on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Michael Barr. This is Bloomberg. Paul Tom.
Michael Barr, thanks so much. Wow, this is a headline, folks, showing the tensions in Europe and particularly in Eastern Europe. Mr. Orban, a leader of Hungary, he wins approval to rule by decree indefinitely. That is just extraordinary to see as well. A most interesting day in the markets. We had a churn in equities right now, green on the screen, futures up 32. We're watching oil. Tough day for oil. Stay with us. Paul Sweeney and Tom King. This is Bloomberg.
Not completing high school is more of a social thing than it was an academic thing. I came out in the 11th grade. Nobody was embracing you. The kids were cruel. It was very difficult to be gay. Even though all these years have passed, I still had that longing to have my diploma. The hard part was determining that I was going to do it, but I definitely didn't do it alone.
At age 30, with the help of her mentor, Carissa finished her high school diploma.
I have a mentor, Maria. She convinced me to continue my education and to finish what I started to get my diploma. Just never judges. She's a true role model. If you're even considering getting your high school diploma, go get it. You can do it.
No one gets a diploma alone. If you're thinking of finishing your high school diploma, you have help. Find free adult education classes near you at finishyourdiploma.org. That's finishyourdiploma.org. Brought to you by the Dollar General Literacy Foundation and the Ad Council.
Asset managers who seize change to launch new strategies, add distribution channels, or exploit new technology to re-engineer the investor experience are often rewarded. However, in an industry paralyzed with complexity, few act with agility or decisively. Few run their business strategically. Yet, the most competitive managers in the market know with the right partner and a flexible operating platform, you can. Go boldly toward change with SEI Investment Manager Services.
I'm Steve Meyer, president of SEI's Investment Manager Services. At SEI, we understand the emerging forces that will define success for asset managers and what firms will need to compete tomorrow. That's why we continually optimize SEI's global operating platform. If your business requires greater agility, our advanced technology, integrated best-in-class systems, and multi-asset expertise can be your catalyst for business transformation.
With SEI Investment Manager Services, you lead the charge in a competitive marketplace. Learn more at seic.com/c.
For centuries, Welsh farmers have been perfecting the balance between maintaining the spectacular landscapes of Wales while producing delicious lamb and beef. Lucky for us, we have everything we need from the elements: grass, rainwater, and a whole lot of pride. Sustainability is key as we continue to work in harmony with our surroundings to bring you a plate that's uniquely Welsh. It's in the taste. Learn more at eatwelshlamandwelshbeef.com.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and on Quick Take by Bloomberg. This is a Bloomberg Business Flash.
And I'm Karen Moscow. U.S. stock index futures turned higher while stocks are mixed in Europe and fell in Asia as investors weigh a weekend full of negative coronavirus news against the stimulus measures that triggered a bounce in risk assets last week. We check the markets every 15 minutes throughout the trading day on Bloomberg. Right now, S&P futures are up 27 points. Dow futures up 182 and NASDAQ futures up 90. The DAX in Germany is up 0.2%. 10-year Treasury up 11/30 seconds, yield 0.63%. The yield on the 2-year 0.26%, and the 30-year yield at 1.23%. NYMEX crude oil is down 5.8% or $1.25 to $20.26 a barrel. COMEX gold is down 0.7% or $10.90 at $16.4350 an ounce. The euro 1.1028 against the dollar. British pound 1.2405. and the yen at 107.98. And that's a Bloomberg Business Flash. Tom and Paul.
Thanks so much, Karen. Greatly appreciate that. Right now, someone who's been with us almost daily and hugely valuable, Damien Sassauer on Emerging Market. Damien, we're talking with Bruce Kasman, head of all of economics and research for J.P. Morgan, and he agreed with you on the focus on EM now is acute and necessary. When EM breaks, how does it break? What's the process? What's your study of the history of when they go, they go?
Well, I mean, Tom, you really can't look at history. I mean, because in '98 it was Russia. I mean, there were so many different reasons. You know, in 2008 it was liquidity. In other markets, it's been fundamentals like oil. So it really are. There's so many different mechanisms and so many different ways that emerging markets will touch DM. But for me, right now, I think the mechanism, the transmission mechanism I'm most focused on are these swap lines from the Fed. And so, you know, you're seeing a lot of central banks like in Mexico, Brazil, Singapore, and South Korea who are going to test these lines for the very first time. And I'm very, very interested and very focused on how they're going to do that.
Damien, how often do they do that? And is it a sign, are you going to look for the magnitude or just the frequency here?
Well, no, I mean they're capped, but they also have an option between going 84 or 7 days. So it's a function of, you know, where are they going to position themselves? Do they need it for longer? Do they need term funding or overnight, right, or 7-day funding, right? But really, as it stands, it's still the big four central banks: the ECB, the BOJ, the BOE, and the Swiss National Bank that have drawn down $200 billion already. We saw the DNB, the RICS, the NOR just tap it a bit last week, but now we're going to see if South Korea and Singapore and, I mean, Brazil. Let's think about Brazil. Down 50%. The equity market's down 50% of its value year to date in dollars. I mean, it's the worst performing asset class of anything globally. Mexico was just downgraded. I mean, the peso's getting crushed on oil and Pemex as well as the VAR shock. You know, Singapore just cut overnight. I mean, South Korea, it's getting there. So we need to see, you know, if the dollars are going to make a difference in some of these local markets.
Damien, Stan Fisher, after the IMF of 1998, wrote a wonderful book. I call it the Red Book. I kid him about it. I call it the Red Book. I've read the thing cover to cover, and the basic thesis of it is the idea of IMF or somebody else coming to the rescue is it happens, but these countries have to be responsible for themselves. Do you detect the responsibility now?
You know, Tom, you're hitting on a really interesting point here, right? And I have to say, to me, what these swap lines can actually be is a reverse of the sanctions on Russia and Venezuela. So let me be clear. If the U.S. realizes that these swap lines are in a more effective way of getting dollars to the places that need it most, it becomes very, very political in terms of who does the U.S. determine as its geostrategic partners in the world, right? And so I think there's a lot here that you need to kind of stay focused on in terms of who's tapping them, the extent to which they're tapping them, and who the U.S. is willing to lend to.
Damien, Tom and I, we've been looking at WTI all morning here, $20 a barrel. Yep. Wow. What does that mean for your world?
Oil exporting EM sovereigns have borne the brunt of the pressure over the better part of the last month. And it's not just, you know, Colombia, Mexico, Russia. I'm talking Nigeria, Angola, Gabon. I mean, following Ecuador, pretty much, I mean, Ecuador is in default and the rest of them can follow suit. We've seen some pretty big downgrades. You know, the sovereigns, and I said this last week to you, Paul, that I'm now kind of moving into and looking at that are heavily reliant on tourist flows like Costa Rica, Dominican Republic, and Tom, Jamaica. You know, these are big dollar borrowers. So we need to get, you know, a sense that these guys are going to weather the storm. I'm really doubtful that just IMF lines alone are going to really, you know, carry the torch here.
Well, I mean, I'll go with that, but I'm also going with just the deterioration, whether it's South African Rand and the rest of them. Is it just a smooth curve, or is it one day we wake up, boom, IMF, and that's a new headache given this horrific crisis that we're in?
It's definitely not a smooth curve, okay? I mean, like what I would say, and you're making a great point. In Korea, for example, you know, what's really impacting liquidity is the fact that you've got all this auto-callable hedging because dealers are facing margin calls on these equity, you know, linked notes. There's all this stuff that's so idiosyncratic, as you rightly point out, Tom, that each market is so different, and the struggles that they're facing domestically are a function of how these markets have evolved over time. And so it's difficult for us to sit here and say, yeah, you stimulate everybody. everybody's going to rally all at once. Certainly not the case. Certainly not the case.
Just because of time, let's leave it there. Damian Sassar, thank you so much with Bloomberg Intelligence and Bloomberg Markets today on emerging market. And Paul, I'm sorry, I'm getting out front of the May-June story, but this just screams Sass Hour 24/7.
It does,
in about 6 weeks. I mean,
yeah, exactly. I'm just not sure what
it coming.
Yeah, I'm just not sure what the IMF can do here, given how broad the demand is likely to be.
Well, it's a new world too. I mean, the speed of movement is something. If we can go for old world, this is just in, folks, and this is cursory to say the least. The Associated Press is saying once again there has been a thief of a painting. It is out of a Dutch museum, and it is a Vincent van Gogh, and that is a huge, huge deal.
Yeah,
I don't know if it's in Amsterdam.
It's like at Ocean's 11.
But it's like a big deal over there, and they have, particularly in Amsterdam, some exquisite museums, obviously centered on hero Rembrandt and the other guy Vermeer. You can see what a sophisticate I am on this, Paul.
Absolutely.
But very seriously, they've released a terse 2-sentence announcement of another stolen painting, and I'm sure we'll get much more on it. We say good morning to Boston, 106.1 FM, where they're still living the legacy of the thefts of paintings at the Isabel Stewart Gardner Museum. And what they do that I think is so classy is the empty space on the wall. They leave the space on the wall empty at the Gardner, Paul.
Okay.
So you walk by and you see the hole in the wall where the painting once was. I think it's very effective.
That is.
Serious stuff as well.
Yeah, absolutely.
What do you see in the markets? I mean,
I'm seeing, it's interesting. I'm seeing a little bit of stability there, Tom.
Yeah.
We've got a little bit of green on the screen. We're near the highs on the session, and in terms of kind of some of this early market activity here as we try to get these markets open, but a little bit of green. But oil just sitting there at $20 a barrel. That's really what jumps out at me. And it just raises the question: Saudi Arabia, Russia, what are you thinking about?
Well, what they're thinking is maybe talk to President Trump saying he will speak to Mr. Putin today. That gave a little bit of a reprieve as well. We are thrilled you're with us today across all of our different platforms. Sweeney and Tom King, we need to get the markets open. This is Bloomberg.
Business is constantly evolving. Is your financial printer evolving to keep ahead of the curve? At Command Financial, we are redefining financial printing by providing industry-leading expertise, leveraging technology, and honing processes and best practices. Every day, Command helps SEC registrars, as well as members of their working groups, including securities attorneys and investment bankers, prepare, file, and disseminate regulatory and disclosure documents, such as registration statements, M&A documents, and mutual fund prospectuses and reports. Command provides a full range of services to help you effectively complete your deal, meet your disclosure requirements, and achieve your shareholder communications objectives. Visit our website at commandfinancial.com and learn how we're evolving, not only with the times, but also with your business requirements. Command Financial, redefining financial printing.
Elite advisory firms rely on BNY Mellon's Pershing to meet the needs of their most complex clients. Karen Novak, Chief Operating Officer at Pershing Advisor Solutions, explains how.
At BNY Mellon's Pershing, we bring customized insights and strategies to help you grow your advisory business and stay on the leading edge. We can support the needs of your most sophisticated clients with a full range of investment and wealth management solutions, from access to private banking to consolidated bank and brokerage custody. Learn why so many of the largest advisory firms turn to us for the financial strength and high-touch service that BNY Mellon's Pershing can provide. Are you well positioned to stand out from your competition?
Learn more at Pershing.com or call 800-445-4467. Brokerage custody provided by Pershing LLC and other services provided by Pershing Advisor Solutions LLC. Both members of FINRA and SIPC. Private banking and bank custody provided by BNY Mellon NA. Member FDIC.
This is a vital update from the government about coronavirus. To help save lives, stay at home. Anyone can spread coronavirus. Only leave your home for the following reasons: to shop for basic necessities, to pick up medicine or to provide care to those who need it, to exercise once a day, alone or with members of your household. Only travel to work when you absolutely cannot work from home. If you have to go out for any of these reasons, always stay 2 meters apart. Do not meet others outside your household, even friends and family. Stay home. Protect the NHS. Save lives.
From cafes by the sea to restaurants in the city, at Starling Bank, we'll help you keep your business flying high. With flexible overdrafts of up to £150,000, we'll get your cash flow running smoothly. Your business is ready for takeoff. Starling Bank, helping business fly.
Want to know a great way to discover the latest and greatest sports audio on TuneIn? It's easy. Just make sure push notifications are enabled on your phone to receive recommendations of sports talk radio and podcasts, along with important breaking news updates.
Next time on the New Yorker Radio Hour, I'll talk with our Washington correspondent about the many political battles being waged in the Capitol over how to deal with the new coronavirus.
You couldn't imagine a president personalizing a crisis with a virus, but somehow that's where we are.
Susan Glasser. Listen to this episode of the New Yorker Radio Hour on TuneIn today.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119 and around the globe. The Bloomberg Business app and BloombergRadio.com. This is Bloomberg Surveillance.
Good morning, I'm Karen Moscow, along with Tom Keene and Paul Sweeney, and the S&P 500 is higher at the open, up 1% or 24 points to 2566. The Dow Jones Industrial Average up 0.6% or 153 points at 21,787, and the Nasdaq up 1.25% or 95 points at 7597. 10-year Treasury up 11/32, the yield 0.63%, the yield on the 2-year 0.24%. NYMEX crude oil is down 5.8% on $1.25 to $20.28 a barrel. COMEX gold is down 0.6% or $10.60 at $16.4350 an ounce. The euro 1.1023 against the dollar. The yen is at 108. Tom and Paul.
Thank you so much, Karen. Greatly appreciate that. One of the things, thank you folks for so many emails and thoughts over the weekend, particularly that emotional shot I took of the tent hospital outside Mount Sinai. Paul, one of the things we're doing is people saying, well, what are you doing with your time? I'm reading more. I'm working on some incredible music software. And Paul, the other thing I'm doing is I'm staggering into all these streaming services. You know, the crisis has been like a gift to these streaming services, isn't it?
Yeah, I think so, Tom. I mean, I think that some of the early data we've seen is time with media has not surprisingly gone up pretty significantly. Even the broadcast networks reporting significantly higher ratings for their programming. So, people are staying at home, Tom, and they're consuming more and more media. And I think for the streaming services, it's a kind of a time for just mass sampling, just kind of going back between the sources and seeing what you like and what you don't like and where there's value. So maybe this will accelerate some of the, some of the assimilation of these services.
It is also a time to, when you get Foreign Affairs magazine, not reading 2 articles, but because of everybody stuck at home, reading 3 or 4 articles, or going to what he invented, which is the CFR website, which we make light of it now. But folks, when Richard Haas invented the modern Council on Foreign Relations website, it was an act of God. Never before have you had so much smart programming slammed in front of you on international relations. Website designer Richard Haas joins us now, the president of the Council on Foreign Relations. Richard, did you know what you would wrought when you were screaming, we've got to do a website and do it right? Did you have any idea where this would lead?
Not even close. Close. But it really is an amazing resource now, and I feel like I have the right to brag on it.
Please.
So many Well, because other people do 99.9% of the work, and it highlights our work, but also the best from anywhere. I think one of the reasons it's so good is we curate, and we've tried to create one-stop shopping, whether you're an expert or also if you're a beginner. We have, for example, the most traffic part of the website, Tom, are these backgrounders and explainers.
Right where I was going to go.
People who are not experts.
Guys, let me interrupt Ambassador Haas, and Paul Sweeney wants to jump here as well. Folks, dirty little secret. Tom Keene isn't that smart. I just go over to CFR and read the backgrounders as fast as I can. They go, Richard, oh, God, he's just unbelievable. And Paul, jump in here, but I'm just reading the backgrounders.
Right, we know that we know the truth. So, Richard, as we sit back and take a look at what's going on around the world here with this virus, what are just some of your takeaways as to some of the governmental responses that we've observed?
Well, my first takeaway is that this is part and parcel of the world we live in. All these people who talk about it being a black swan or coming out of the blue are dead wrong. This was predictable. It happened now. And guess what? Things like this are going to happen again. That's my first takeaway. So governments need to be prepared. They should have been better prepared than they were. The international health machinery should have been much more oiled than it was. We all ought to have had stockpiles. China ought to have communicated openly and honestly about its, what had happened there. And then, moving forward, governments have to have, again, stockpiles. They've got to have testing. They've got to have protocols ready. Essentially, the world was caught flat-footed for this. And most of the responses have been inadequate and incoherent, ours in particular. So it seems to me what's inevitable is that there will be COVID-20 or COVID-21 or some other disease, and that we have to be prepared for it much better than we were for this.
So how do you think, life will change after this? So when we get to the other side here, do you really believe that governments can, in fact, kind of prepare as you were just suggesting?
To some extent. I would think that you're going to see a larger role for government. A couple of areas that come to mind is I do think you'll have more stockpiles of, let's say, equipment or ventilators. I think something like the Defense Production Act, that idea will become more of a peacetime or normal thing. So we're going to have relationships established between the private sector and government, much more elaborate than they are now. I think you'll see less supply chain dependency. So I would think in a couple of years, you're going to see a policy where the United States will say two things. We are not going to single source anything that's critical, be it in China or anywhere else. We're going to multiple source it, so we're less dependent on an interruption from one source. And second of all, we're going to build a domestic capacity. So we're going to become a little bit more self-reliant. I think that's in our future.
Tell me about Lori Garrett. You have one of the jewels in our coverage of these viruses, and Lori Garrett, her work on Ebola was original and path-breaking as well. I'm sure you're calling up Lori, you're running into her in the hallway at CFR and saying, Lori, what's going on? How does she report to you?
Well, actually, Lori, while she's still a member of the Council on Foreign Relations, is not on our staff anymore. She's active on social media. She's active on MSNBC, and she's been an important voice in this debate for years. And she was one of those who first said, "You'd better get ready. This is coming." We have three people. We have three people. One is Tom Frieden, the former head of the CDC. He's active on our staff. We have a guy named Tom Boyke, who started up a new, really important site called Think Global Health. It's on CFR.org. It has become actually the best virtual venue where the leading experts in the world have conversations about global health issues. It started off just weeks before this happened, coincidentally, but it's already become a central hub of the conversation. And then we have one other person, Yangzhen Wang, who's an expert on Chinese public health, as it turns out. So we've actually got three people on staff, as well as any number of members. I know on my board, for example, we have people like Peggy Hamburg, the former head of the FDA, Sylvia Burwell, the former head of HHS. We've got several former heads of Homeland Security. So it turns out that we have enormous access to resources.
So, Richard, what do you think this virus, again, kind of looking ahead a little bit, means for globalization? Have we seen peak globalization?
Well, globalization continues. Globalization itself is just a reality. It's globalization is simply the reality that an awful lot of stuff crosses borders in great volume at great velocity. That doesn't change. What could change is the collective response to globalization, and so far it's been anemic. Whether it's in the health area, obviously climate change, you name it. The response to globalization has been inadequate. I wish I could sit here and say it's going to be a lot better going forward. We will have learned our lesson. But I'm worried that we're entering a period where a lot of countries are going to be looking inward. They're going to be strapped for cash, given everything that this is going to cost. So I don't think this is going to be a great era of what people in my business call global governance. I worry that there'll continue to be a large gap between these global challenges and the collective response.
I look, Ambassador Haas, at the challenges forward, and they center back to your book. We should mention that Richard Haas, folks, has a new book coming out May 12th on the world. It's a wonderful briefing forward. Your previous book was on disarray and our fiscal responsibility. I believe the helicopters over Central Park are dropping money, from what I can observe from here. Richard Haas, give us an update, your report on our fiscal responsibility.
Yeah, well, helicopters are dropping money, and they're going to have to drop a lot more. Not only is taking care of the public health directly expensive, but relief for American firms and citizens and workers. So we've just passed a $2 trillion bill. My prediction, Tom, is that's the first of several. And the longer this goes on, the more we're going to need. Now, before this crisis even hit us, we were already racking up deficits at the tune of more than $1 trillion a year. So we're going to start racking up deficits at the tune of, $3-5 trillion this year. Our debt is going to grow, well into the 20s or 30 trillions of dollars. And the question is, to what extent is the world going to be permanently willing to finance it?
Richard Haas, thank you so much for your time today across this morning. He is the president of the Council on Foreign Relations. On LinkedIn and Twitter, I've just put out this extraordinary compendium of medicine, Think Global Health, and look for that and study that in the coming days with the Council on Foreign Relations. Paul, we're 10 minutes into trading. What are your observations on the markets?
Yeah, I think, Tom, again, a little bit of a stability here, I think, for the market. I mean, it's been such a tremendous gyrations. We have a little bit of green on the screen here. Looking at the 10-year Treasury as well, up about 14-30 seconds, bringing the yield down a little bit there on the 10-year. Yeah. But again, just looking at WTI crude here, it's sitting right at, $20.20 a barrel. Just extraordinary, down another 6% today. Even gold's trading off a little bit here today, Tom.
Clearly, the theme over the weekend was a readjustment of American and global growth estimates lower. With our news in New York City, here's Michael Barr.
Tom, Paul, thank you very much. There is breaking news out of the Netherlands. Officials at a Dutch museum say a Vincent van Gogh painting was stolen in an overnight raid. Spring Garden by the Dutch master was stolen in the early hours today. Public health experts are relieved President Trump dropped the idea of encouraging Americans to go back to work and church in just 2 weeks. Bloomberg's Martin DeCarroll reports many governors expect the coronavirus pandemic to be at its worst point by then.
Maryland now has more than 1,200 cases. By mid-April, it could look like New York. That's the warning from Governor Larry Hogan in a Fox News interview.
I think most governors are going to do what they think is right to save lives.
And the nation's top infectious disease specialist, Dr. Anthony Fauci, warns people living in areas with few cases now to avoid complacency.
So we shouldn't take any solace when we see low levels in different states, different cities, different areas.
Even with aggressive action to slow the virus's spread, Fauci offers a grim possibility of at least 100,000 Americans dying from COVID-19. In Washington, Martin DeCarroll, Bloomberg Radio.
New York can expect some help from its stressed hospitals today over the coronavirus crisis. The USNS Comfort docks in Manhattan's West Side. The Javits Convention Center has been converted into a temporary hospital, and a field hospital has also been set up in Central Park. Tenants in New York City would be allowed to use existing security deposits to pay April rent under a plan floated by local officials to help ease the financial hardships caused by the coronavirus pandemic. Global news 24 hours a day, on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Michael Barr. This is Bloomberg. Paul, Tom?
Michael Barr, thanks so much. We had a headline, the president to speak with Mr. Putin. That gave a nice pop to oil. The pop has disappeared at $20.14. Excuse me, make that. My eyes are failing me here, Paul. Yeah, I guess it's 20.14.
Yeah, that's where it is.
They make the acclaimed Bloomberg mobile phone service, Paul, for 24-year-olds. I don't know how you figure that out.
We have to get you the multi-screen setup for you.
Yeah, I got the geriatric screen. $20.13 on West Texas Intermediate, down $1.40. Brent crude $22.88 as well. This is a difficult day for oil. Paul, you and I have seen this before. You never can predict what it's going to be, but there it is, and it's a set of things, including oil down, the Breder Commodity Index down as well. We thank Francisco Blanch of Bank of America for his comments earlier. Stay with us. This is Bloomberg.
This is a Bloomberg Pursuits look at luxury. In the age of coronavirus, with gymnasiums and fitness centers closed, how can we possibly stay in shape? Arnold Schwarzenegger took to Reddit recently to share a home workout anyone can do. The former California governor said, and I will not attempt the accent, gladiators and Vikings didn't have gymnasiums. Schwarzenegger prescribes a routine of body weight exercises such as push-ups, leg raises, squats and dips, and rows between chairs. U.S. gamblers have turned to Eastern European table tennis, with major sports schedules dark. Ping-pong matches from Russia and Ukraine accounted for nearly 60% of the funds wagered on DraftKings over the past week. Companies also created free-to-enter pools around other types of entertainment, such as Larry David's Curb Your Enthusiasm on HBO and the last Democratic debate, offering options like, what will Bernie Sanders say first, millionaire or billionaire? Another accent I won't try. I'm Andrew O'Day, Bloomberg Radio.
Message and data rate may apply. T&C and privacy terms can be found at bevel.com/terms. Please don't text and drive.
Have you wanted to speak a new language, but you thought it'd be too hard or take too much time? Then try Babbel for free by texting EXPLORE to 64,000. In just 15 minutes a day, you'll be on your way to speaking a new language in just a few weeks. And right now, you can try Babbel for free. Babbel starts out teaching you words and phrases by matching them with pictures. You won't believe how easy the interactive program is. Soon the sentences get a little bigger, and before you know it, you're having simulated conversations voiced by native speakers. And because Babbel is crafted by language experts and uses the spaced repetition method, in just 10 to 15 minutes a day, you'll be speaking the language of your choice with real confidence. With Babbel, you can speak a language. Just text EXPLORE to 64,000 and start your first lesson in the language of your choice for free. Download the Babbel app or text EXPLORE to 64,000 and try it for free. Text EXPLORE to 64.
Listen to Raj go. Polyrhythm, paradiddle. A drum solo so epic, he nearly forgot his mom's birthday back in Delhi. Good thing Raj has Western Union on his phone and can send money quickly online. Download the app today. This service is provided by Western Union. FX gains apply.
This week at Tesco, large Easter eggs are 3 for £8. And we've got a large choice too on all your favourite brands, including Terry's Chocolate Orange, Cadbury's and Maltesers. At 3 for £8, why shell out more? Tesco. Every little helps. Available in the majority of larger stores and online. Delivery charges may apply until 13th of April.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
On this week's On the Media, we are awash in messages, but some messengers are more effective than others.
Ventilators, ventilators, ventilators. We need 30,000.
Meanwhile, some media outlets choose not to air the president's press briefings live, and media critics ponder what's the right balance between good information and all information. All that and more on this week's On the Media from WNYC. Listen to the On the Media podcast on TuneIn today.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and on Quick Take by Bloomberg. This is a Bloomberg Business Flash.
And I'm Karen Moscow. U.S. stocks are rising after a mixed overnight session as investors saw glimmers of optimism in healthcare efforts to deliver rapid virus testing. The The dollar's rising. We check the markets every 15 minutes throughout the trading day on Bloomberg. The S&P 500 up 0.6% or 16 points to 25.57. The Dow Jones Industrial Average, it's little change at 21,635. And the Nasdaq is up 0.9% or 64 points to 75.64. 10-year Treasury up 13.30 seconds, yield 0.63%. The yield on the 2-year 0.24%. NYMEX crude oil is down 6.2% at $1.33 to $20.18 a barrel. COMEX gold is down 0.5% or $7.80 at $16.4640 an ounce. The euro is at 1.1019 against the dollar, the yen at 108.05. And we are watching shares of Abbott Labs up 8.1% after unveiling a 5-minute coronavirus test. That's a Bloomberg Business Flash. Tom and Paul.
I just got to say, we all know Karen Moscow does the best data checks in the world. Karen, if I disassociated myself from any of the news flow and I listened to the numbers you're saying, I'd go, what planet are you on?
Right.
I mean, it's just absolutely extraordinary where we are in these markets, whether it's those yields you were quoting or oil at $20 a barrel. It's just, it makes me shake my head, as it does as well, Karen, when I look at, say, John Farrell having to look back, folks, to soccer and go back and look at English football games of another time and place. Look how I can look back, too, wistfully, to 1969, the quarterfinals, Bruins 4, Leafs 0. 1972 quarterfinals, Bruins 4, Leafs 1. 1974 quarterfinals, Bruins 4, Leafs 0. Then it gets better. 2013 conference quarterfinals, Bruins 4, Leafs 3. 2 years ago, Bruins 4, Leafs 3. A year ago, Bruins 4, Leafs 3. I believe, folks, we've detected a pattern, which is good to bring in Luke Kawa right now. And Luke, this is one of the greatest stories in all of sports as well. What is it like at Maple Leaf Gardens when the Bruins darken the door?
Well, thankfully, by the way, there's no way you've completed the employee harassment training that took 7 days. So please check your inbox for that. Yeah. Maple Leaf Gardens, unfortunately, I haven't been there since the mid-90s, but the Air Canada Center, it's hell. It's like, it's knowing something bad is going to happen, so it's like neat eternal recurrence, knowing that you're destined to live this life over and over and are going to get the same horrible response. That's how it feels every time the Bruins.
Folks, let's be clear, the Maple Leafs are an exceptionally gifted team. And this jinx, this pixie dust that the Bruins have on them is truly one of the great stories in sports. Over the weekend, Luke Kawa, what was the story you focused on in the markets? I mean, the broad Luke Kawa world, what was the thing that mattered to you?
I mean, to me, the thing was starting to hope to see some of the correlations break down and trying to see what kind of nature would be of any equity balance if it continues. Because last week, especially in Tuesday, Wednesday, if you saw the kind of the nature of the equity bounce, it was very, very much everything that everybody hated, all the short legs of the momentum trades, all the weak balance sheet companies, value stocks. It was all that bouncing, so it kind of had the air of exhaustion on the things we hate. And now it's kind of trickled into, if you look at what's doing well today, early out of the gate, you've got healthcare, you've got software stocks, you've got tech outperforming. It seems to be kind of more of a rally, a labor of love so far. And seeing that might be a little bit encouraging. Suggests that people do have the buying power to get back into the stuff that they weren't able to because they were too busy raising cash. Speaking of rebalancing, I think we've seen this. We saw it last Thursday, and we're seeing it again today. The real rebalancing to be thinking about is not from bonds to stocks, but from cash into everything else. And you got that again today with the 10-year yield meaningfully lower and stocks and high yield up.
So, Luke, what do you? One of the things folks have been telling us to really focus on is the credit markets and liquidity in the credit markets. Has that gotten any better?
Yes, it has, and it's been beautiful to the extent to which it's kind of rippled through the capital stack. Because first it was, very much the only places it was getting better or it was correcting was where the Fed was getting involved. And David Bieber at Citi does monitor this, and he says, it's improved, it's recovering but it is not recovered, is how he kind of deems the kind of state of play here. And I'll read from his recent notes. And high yield credit is now falling investment grade with a reduction in costs following Fed intervention. But trading costs are still about 2.5 times the historical average. And EM credit is the kind of more troubled, more stressed spot in terms of trading costs, where that's still running about a 5x its historic average.
Luke, give us an update on these two short-term spreads that harken back to 2007 and 2008, LIBOR, LIBOR-OIS, and FRA-OIS. What do they tell you right now?
I think very much broadly the same story as kind of any liquidity snapshot or any funding stress snapshot across markets. The kind of recovering, but not completely recovered, and it does kind of suggest that the tools, the facilities that are being deployed are taking some time to work their way through the system, to be adopted, and then to be kind of redeployed and accepted by financial institutions.
Luke, thank you so much. Paul and I look forward to coming over to dinner because, folks, Luke cooks on a weekend like nobody I know. Mr. Kawa is with Bloomberg Markets, and we thank him for his attendance today. Paul, just amazing. I'm looking at all the economics, the finance we talk about, and if we get back to Wall Street and the tradition and crisis of securities analysis, it used to be easy. And in all these different industries, Oliver Chen scheduled to be with us tomorrow with Cowen in retail. Poonam Goyal just putting out the Bloomberg Intelligence apparel piece. How do you even begin to construct it?
It's interesting on the retail side. I mean, it's consumer behavior has changed, and I think a lot of retail analysts, retail investors are saying, okay, has it changed? Is it temporary? What's consumer behavior going to be like when we come out on the other side of this? Will it accelerate the move towards online for not just the Amazon stuff, but everything else that you think about? So it's really a question for the retail industry that it's just accelerating the trends there, I think.
I'm an optimist on it if we get real economic growth back. And that may be a lower number than Morning in America. It may not be 3.5%.
Right.
It may be a lower number, but I'm sorry, I'm a resilient American optimist on that. But first, Paul, we got to get there.
Yeah.
And what shifted over the weekend is the there.
Yeah.
There is out there.
Yes, it is.
Somewhere else. This has been an extraordinary Monday. It's an incredibly eventful week coming up, not only as we look at the markets, but also the labor economy, starting with ADP on Wednesday, claims on Thursday. That'll be a horrific number, and a curious jobs report on Friday. We are produced somewhere in the vicinity of the tri-state area by Richard Truman. This is Bloomberg Surveillance.
On this week's On the Media, we are awash in messages, but some messengers are more effective than others.
Ventilators, ventilators, ventilators. We need 30,000.
Meanwhile, some media outlets choose not to air the president's press briefings live, and media critics ponder what's the right balance between good information and all information. All that and more on this week's On the Media from WNYC. Listen to the On the Media podcast on TuneIn today.
Leave it to the New York Times to make the most intelligent pop music podcast out there.
Welcome to the New York Times Popcast.
On the Popcast, the Times music staff gets together for a weekly roundtable on the hottest topics in popular music. From award show autopsies and reactions to new releases to difficult-to-process scandals and emerging themes in the music landscape, hear distinguished music critics share their perspectives on the latest music news, songs, albums, and artists of note on the New York Times Popcast. Search and favorite Popcast to join the conversation.
TuneIn makes it easy to be a part of the conversation. Just make sure push notifications are enabled to hear about breaking news and trending topics from around the sports world. You'll also get custom recommendations of podcasts and radio stations covering the sports and teams you care about.
Are you curious what others are listening to on TuneIn? Head to the trending section under Browse to see the most popular stations and podcasts among TuneIn listeners right now. Check it out. You might just discover something new for yourself.
Get to the campfire. And be extra careful with things like burning yard trimmings. Don't just walk away, or chances are you might be starting a wildfire. So for the love of the outdoors, go to SmokeyBear.com to learn more about wildfire prevention. Brought to you by the U.S. Forest Service, your state forester, and the Ad Council.
25 years ago, NJIT graduate Dick Sweeney co-founded Keurig Green Mountain, a company whose incredible innovations changed the way the world brews a cup of coffee. Today, he lectures widely on business leadership and is a strong advocate for NJIT's work to combine business education with the power of STEM.
NJIT is definitely fostering the innovative thinking for budding entrepreneurs simply because that's the world we live in. NJIT is producing